Good afternoon. Today is Monday. What is today? 25th. Monday, March 25th. This Committee of Finance, Diversity, Equity, and Inclusion is called to order. Madam Clerk, please call the roll. Here.
Present.
Here.
Present.
Present.
Ask them what they got. All right, thank you. All right, we got a couple of pieces of legislation, and then we're going to go into the TIF conversation, okay? So, first and foremost is ordinance number 230-224 by Council Members Polinsik and Griffin by departmental request, an emergency ordinance authorizing the Director of Public Safety to accept a grant from the United States Department of Justice COPS Office for the FY23 COPS hiring program for violent crime reduction. Chief, Safety Director, and Ms. Hartsong, welcome to the table.
Thank you, President and council members. Yes, with me is Chief Todd to my left, and also Don Hartsong to my further left. She's our grants coordinator. As you stated before, the goal of the grant, if approved by council, ordinance number 230-2024, would authorize the Director of Public Safety to accept a grant for fiscal year 23 COPS hiring program grant. This grant will provide funding for 30 police officers over 3 years for violent crime reduction and will pay a portion of their base salaries for 3 years. The purpose of the grant, the goal of the grant is to provide funding for violent crime reduction by assigning 6 additional officers to each of the 5 police districts. The teams will focus on helping the community identify and address criminal activities in their neighborhoods and coordinate with partner agencies and other police units to target high crime areas and suspects. These additional officers in each of the districts will work as a team and will attend the community meetings and community events in order to talk to residents and other stakeholders and complete an annual community policing report detailing community policing efforts in each of the districts. The expenses to be reimbursed for personnel would be $8,203,000, $8,203,000, $320 for 30 police officers, for a total of, like I just stated, and then the grant award is $3.7 million. In kind is $4.4 million for a total cost of, I stated before, the $8,203,320. The grant information, the grant period is from October of last year through through September 30th of 2026, and this is a brand new grant.
Thank you. Chief, did you have anything you wanted to add?
So, good afternoon, Chair and council members. Currently, our district operations do have violent crime detectives. This would increase the capabilities to expand that program, throughout the 5 police districts.
Okay. Ms. Hartsong?
Thank you. Through the chair, this is a competitive grant, so the Division of Police has been very successful over the last 29 years in obtaining COPS grants, and so we're excited about another one.
Thank you. Okay, Councilman Michael Polinsik, this went through public safety. Did you have any remarks?
Yes, Mr. Chairman, my honorable colleagues, and to the Safety Director in Chief and Ms. Hartsong, we heard it, we discussed it in detail, and the council supports it wholeheartedly, the Safety Committee. My only question, Mr. Chairman, would be to the Director and the Chief. Again, just some clarification to the members of the body. The 30 that would be redeployed, correct?
To the chair, and the chief Todd can speak more specifically. Yeah. She's the head of the division, but that's correct. We don't take 30 brand new officers and assign them to this. It's veteran officers.
Okay. Thank you. Thank you, Mr. Chairman.
Okay, thank you. Anybody else have any questions for the Chief Safety Director? Seeing no other questions, ordinance number 230-2024 stands approved. Thank you, guys.
Thank you.
I do, for miscellaneous, we do want to make sure that you talk with Councilman Polinsik about the police hiring. We budgeted for 181 this year. We know that we're going to have attrition, and we want to understand the aggressive plan that's going to get us ranked up. We are encouraged by the 52 today, but It's still a long ways to go. So I've asked Councilman Polisic to really keep a close eye on that, okay?
Sure, absolutely. Thank you.
Seeing no other questions, ordinance number 230-2024 stands approved. Please sign on. Director Cole. Somebody text Conwell, tell him his piece is up. All right, Director Cole, this is ordinance number 338-2024, an emergency ordinance to amend sections in ordinance number 194, 2021, passed March 29, 2021, as amended, relating to salaries for various classifications. By Councilmember Griffin by departmental request. This will be considered for passage tonight by the full body. Director, tell us why we need this and why we need to move this tonight.
Thank you, Chairman and Council. So I'm requesting several changes to sections 2 through 6, 30 through 45, section 53, and then sections 56 through 57. The passage amends the pay bands for all non-bargaining classifications with the exception of Section 50, the municipal court employees, Section 51, the housing court employees, and Section 52, the clerk of court employees. To be more specific, we're amending the minimum rate throughout the entire classification pay band of classifications to the minimum of either 1533 or 31,866 to bring all of the classifications up to the minimum, and then for all the maximums to increase them by a total of 10%. To incorporate for the 2024 gross wage increase, general wage increase, and then any other changes that may occur, whether that be salary adjustments, plan changes, or anything within the departments. And then it also removes in several of the sections the terminology "and the compensation," as many of the sections refer to salaries and the compensation. So it's just a piece of cleanup there. And then finally, it's to recognize section 45. There was a change made under ordinance 1016-2023 in which we had added the student aid position, but it was actually never issued out. So I'm just incorporating into this piece. And that's the main changes I'm requesting.
Thank you, Director. Does anybody have any questions regarding 338-2024? Our resident personnel watcher, Councilman Casey? I'm good. Councilman Casey, you got this on the first bite with Councilman Casey. You must be on your game, Director.
I appreciate it.
Because usually he catches if there's a discrepancy somewhere. All right. Anybody else have any questions regarding 338-2024? Councilman Brian Casey.
Mr. Chairman, to the Commissioner, these new pay bands, were they reflected in the budget we just passed?
Through the chair to the councilman. So the budget is separate. So the budget is within the pay bands.
Oh, so the budget we just passed is within the pay bands that we're asking for right here?
That's correct.
So we put these new pay bands in a budget even though we hadn't okayed the passing of the pay bands?
Through the chair to the councilman, just a point of clarification. So the GWI could have fallen within the pay bands, but in order to make sure there was not a classification that would have fallen outside of the pay bands, that's in part why we're increasing the maximums.
All right, Mr. Chairman, to the Commissioner, but these maximums were not in the current budget that we just passed?
Through the chair to the councilman, no.
Okay. And how, Mr. Chairman, to the Commissioner, how does this pay increase, which it looks like some of them are not unionized, correct?
Through the chair to the councilman, these are actually all non-bargaining.
These are all non-bargaining. How does this affect our bottom line in the budget? With this increase right here, what's the total amount increase?
Through the chair to the councilman, so this isn't the budget. This is just the permission to have the salaries within the pay bands, but the budget is still the budget.
Okay, I'll ask it this way. Mr. Chairman, to the commissioner, what's the increase in the overall balance that we're adding to the budget that we just passed a week ago? If we're increasing the maximums, they may not be getting the maximums, but we have to still budget for the maximums, correct?
Through the chair to the councilman, I would say no. The budget for the salaries is still the budgeted amount.
Through the chair of the councilman, so we budget based on actual salaries and then any known wage increases, which is the 2% general wage increase that will take effect April 1st for non-union employees. This is just an effort to ensure that with that 2% increase, we don't exceed any of the pay bands, and it gives managers flexibility to adjust compensation as needed to maintain the workforce that we have.
All right, and then, Mr. Chairman, to the CFO, so you're not coming back to us looking for additional dollars?
Through the chair, that's correct.
Thank you. Thank you.
Thank you. Seeing no other questions, ordinance number 338-2024 will be considered for full passage by the body tonight. Thank you so much.
Thank you.
All right. Last up, this is Council-matic Resolution number 322-2024 by Councilmember Conwell, emergency resolution recognizing that colorectal cancer is the second most common cause of cancer death in the United States and encouraging people to begin colon cancer screening at age 45 as recommended by the American Cancer Society. Councilman Conwell is not here, but did anybody have any questions regarding this piece of legislation? It's pretty straightforward. All right, seeing no questions, ordinance number 322-2024 stands approved. Now, we'll move to, please sign on. Now we'll move to the TIF legislation. This is ordinance number 38-2024 as amended by council members Hairston and Griffin by departmental request. And I'll read the amendments. We do have a few amendments. And the First Amendment is there is no legal objection to this legislation if amended as follows. Strike Exhibit A in its entirety and insert the following new Exhibit A. Exhibit A, map of parcels within the district. There is no legal objection to this legislation if further amended as follows. In the second whereas, please, in the second whereas clause, line 5, strike parks and insert parks, recreation, and neighborhood investments. In 3, insert new section 6A to read as follows. Section 6A, that any and all use of district TIF proceeds shall require additional legislative authority, including issuance of debt. Does the Chief Abunama and the director want to join us at the table? Or I tell you what, before we do that, I do have testimony. And I tell you what, Chief and Director, why don't you give us an update first, and then I'll bring up Mr. Schiller as a subject matter expert because he wants to give testimony. So Chief and Director.
To the chairman, I think first, in addition to the amendments that you read, we have a third amendment that we would like to offer at the table regarding the effective date.
Okay.
And it's to, in section 3, line 3, in section 11, and in section 11, line 3, strike December 31st, 2023, and insert January 1st, 2024 in both places. And I have a copy.
And it's January
1st.
1st, 2024? Okay. Mr. Roberts?
Sorry, that's not right. January 2025, wouldn't it?
No, he's backdating it.
Oh,
Originally, it was backdated to December 23. Now he's trying to backdate it to January 1st, 2024. Right?
Yeah.
So it's basically before, one would have been midnight, but now we're just starting off fresh this year, right? Okay. Take over the thing for me. Hold on.
Alrighty, so this is a new amendment being offered to move the, let's see, initiation date from December 31, 2023 to Jan 1, 2024, one date. Is there a motion to propose this amendment? Councilman Casey moves to amend Section 3. Is there a second?
I'll second.
Councilman Bishop seconds. Madam Clerk, please call the roll on the amendment. I'm sorry, is there any discussion? Excuse me. Yeah, Chief, can you explain a little bit more why you need the one-day bump?
Yes, through the chair of the council, this is essentially the result of some discussions with our partners at the county. This changes the base year from 2023 to 2024 as a way to, basically be a partner with the county and recognize some of the concerns that they've raised and still give the city the tools that we need to move forward with this project and ensure that our infrastructure is invested in adequately.
Okay. Any other discussion on the amendment? I thought I heard somebody. Councilman Hairston?
No, I'm good. He explained it.
Okay, you just want an explanation, okay. Any other discussion on the amendment as proposed? Madam Clerk, please call the roll.
Yes.
Yes.
Yes. Yes. Yes.
So let me read this into the record. Ordinance number 38-2024 by council members Hairston and Griffin by departmental request, an emergency ordinance establishing the Shore Decor to Shore TIF district, declaring improvements to certain parcels of real property within the district to be a public purpose and exempt from taxation, describing the public infrastructure improvements to be made to directly benefit the district, requiring the owners of the improvements on such parcels to make service payments in lieu of taxes, providing for the distribution of those service payments to the Cleveland Municipal School District and to one or more funds established by the city to hold those service payments, determining that satisfactory provision has been made for the public improvement needs and the district, and specifying other public improvements that are in support of urban redevelopment in the city. Who's going first? Chief, Director?
Good afternoon, committee. I'm going to run through quickly a presentation, and many of you saw it last week at DPS. Wanted to make a couple of quick points up first before I get into the slides. The first is the legislation before you today is simply setting up the TIF district. This is the tool. It is not spending any money. It is not committing any money to projects. It is not issuing any debt or authorizing us to issue any debt. We're just creating the district. We'll be back to you for all of those other pieces. This is also, I want to emphasize, part of a broader economic and community development strategy that we are pursuing as an administration in partnership with City Council. The over $100 million of ARPA funding that we allocated for housing and home repair, the funding that we allocated for the Southeast Side, the site fund. This is a downtown public infrastructure focused strategy that we believe will benefit not just downtown but the city, but is one piece of our broader strategy. We also know that we have big public infrastructure needs, and that without making the investments in public infrastructure, as we look at the needs of our downtown coming out of COVID, we need to make some of these investments to make sure that that our tax base continues to grow. The TIF district will also take only increases in future taxes. So no taxing jurisdiction will receive a penny less than they are receiving today than they would be without the TIF district, and any of the upside that they would forego, we would posit, would not come but for the TIF district. And the idea here is to grow the pie. We can continue to fight over a declining share of tax revenue, or we can take some steps to try to grow, add sales tax, income tax, residents, businesses to our community. I want to emphasize as well that no money is coming out of the general fund for this. This is all the funding generated by the TIF district for this public infrastructure will not impact the general fund. We are not raising taxes. And there is an incredible moment right now to leverage state and federal funding through this tool. We've talked about TIF many times and how it works. Most importantly, it is on the increase in tax value, not the base. The existing jurisdictions get the base, only that increase, and it is not abatement. The property owner, any property owner within the TIF district continues to pay their taxes just like they normally would. They are not getting anything back. They continue to pay all their taxes. The critical difference here from what we've historically done is when we normally do a TIF, it is for a specific project. That project has a gap, and we TIF the project saying the increase in value will come because of the project. We're going to give a portion of that back to benefit the project. Here there are three key differences. One, we're doing this across the breadth of downtown. From a broad geographic area, not just from a single project. Second, we're going to fund multiple projects, and here in particular, only public improvements, so dollars cannot go for private development. And finally, we're using a window that the state legislature's opened here to let us use proceeds that are generated in the TIF district anywhere in the city to build public infrastructure. It's called a remote TIF. And essentially, here are the steps on how this works. We established the district, which is the legislation in front of you today. We will come back to council to authorize the use of that TIF revenue, which might be a debt issuance secured by TIF district revenues. Third, we will distribute those debt proceeds for public infrastructure. Fourth, we will then make sure that we work to fund those public improvements. And then what will happen out of that is we believe value will increase, we will pay down debt, and at some point there will be excess TIF revenue that is after we paid the debt service and the other expenditures that are needed for those public improvements. And again, it's important to make those investments in public improvements up front so that the value goes up. Then we will have excess TIF revenue that we can use for other public improvements throughout the city. The geography of the TIF district is drawn to stretch from the lakefront to the river, from the inner belt to the near west side. It is drawn this way because these are the neighborhoods that we think will directly be impacted by the shore-to-shore investments. The blue that you see on the slide here are existing TIFs. The TIF district will not impact those existing TIFs. It accounts for about 18% of the assessed value within the city of Cleveland, about 3.5% of the assessed value in Cuyahoga County. Now, why are we doing this? While we're not specifically allocating funding to any of these projects today, the idea behind the creation of this TIF district is to help us recognize this shore-to-shore vision that is connecting and truly making our waterfronts, a river and lakefront, a part of downtown. Right now they are disconnected, they are inaccessible. Strengthening the connections through downtown and making some of the infrastructure investments that we need in the core of our downtown to be able to attract more residents, attract more businesses, increase quality of life for our residents. And as we think about shore-to-shore, there are really three big buckets that we're talking about. And again, these slides put together the private investment with the public infrastructure. But as we think about the TIF district, it is just the public infrastructure components. On the riverfront, we are working with Bedrock on a massive project that will result in 12 acres of public space, substantial mixed-income residential, new construction. The public infrastructure need here is securing the bulkheads, putting in public space, reconfiguring roads and utilities to make way for development. And what we expect to happen here is by investing $400 million of public infrastructure investment in the riverfront, it will leverage over $3 billion of private investment from Bedrock. They will not make this investment without the public infrastructure investment up front to enable that private investment, and it will drive substantial economic impact, close to $5.6 billion. On the lakefront, again, big public infrastructure improvements here, the North Coast Connector that will bridge the shoreway, taking the shoreway down to a boulevard, creating a public space and development pads north of Cleveland Browns Stadium, and improving and creating this accessibility on the lakefront that we've been talking about for 100 years, including multimodal access for Amtrak and RTA. Again, substantial public investment needed here. Private investment of north of $1 billion follows, and major economic impact. I will again state here, the legislation is explicit that the public infrastructure spending cannot be used on the stadium. The public infrastructure we're talking about here is the North Coast Connector, the infrastructure for the public space, and the shoreway. And finally, the core, making sure that we're making the investments in the core of our downtown to strengthen downtown coming out of COVID. We believe that the investments in both of these projects on the shores will give people more reason to live, work, and visit downtown. Bike lanes, lighting, streetscape amenities to really connect downtown and connect through. We had exciting moves on Public Square today to take the barriers up and put bollards in. These are the type of improvements that we expect to continue. We're still sizing this piece. We believe it's about $140 million of public investment that will drive $1 billion of private and $2 billion of economic impact. So we've had a lot of conversations with residents and the public about these investments and why they matter to our residents. And I think of four big reasons. First is we're going to add substantial park space and public access space to our waterfronts, the river and the lake. The second, we are going to create development and substantial new jobs in our downtown that are accessible jobs, construction jobs, and permanent jobs for our residents. Third, big investments in public safety and in bringing more people, more residents, more visitors, more development downtown that enhances the safety of the entire city. And finally, we've done a tremendous amount of engagement with residents across the city to make sure that the public spaces we're designing as part of this effort are accessible, are welcoming, are designed with our residents in mind. Getting into the numbers a little bit, we've done quite a bit of analysis and study with a variety of partners that we talked about at DPS on what can this generate. Within the area of the TIF district over the last 12 years, we've seen about a 3% annual increase in property value. In other neighborhoods, both inside the city and outside, where there have been big infrastructure investments, there's been substantial investments in value. Bedrock has brought us the example in Detroit, where all the investments they've made in downtown Detroit have increased downtown property values over 20%. And as we look specifically at the projects in the city, where we've done big public infrastructure, it has driven value. I mean, I lived this every day when I was at Midtown. A $200 million investment in the Euclid Corridor has brought over $9 billion of investment alongside a private investment. And when we look at one little slice of that, a narrow stretch of Chester Avenue between 55th and 71st, over that 12-year period, we saw 34% annual growth. We've seen it in Detroit Shoreway as well. The investments in Detroit as well as in Edgewater Park have brought substantial public-private investment, have driven property value increase 8% annually, and we're seeing it now an opportunity corridor with substantial increase. And as we look at what the TIF district could capture, again, we're looking at what is the increased value that is going to come from the public infrastructure investment and the private investment. We know this is a formula that works, and so we have modeled, and I'm going to hand it over to Ahmed here in a moment, a 3.5 to 5.5% annual increase.
Great, thank you, Jeff. So now turning away from the projects themselves and the sort of the idea behind the district and focusing a little more attention on once the district is in place, how we would pay for the improvements that that were just described. We have modeled out a variety of assumptions for what revenue could be produced in the TIF district. And if you use a 3.5% to 5.5% annual growth, that can range from approximately $3.3 billion to $7.6 billion over the 42 years of the TIF district, and that includes this district and the several TIFs, existing TIFs that were extended via legislation last year by this council. And so there are a lot of different ways that this could end up shaking out over time, and this is on the screen is just one example of how the numbers could play out based on these high-level assumptions. And so what you see on the right side of the screen is a sequence of bond issuances or borrowings every 3 years between 2024 and 2042, which would be based on the 3.5% annual growth rate assumption, sort of what we're pegging as around the maximum that we could borrow during that time. And that comes out to just under $560 million. And one of the reasons why that number is perhaps a bit lower than you would expect based on the numbers, the $3.3 billion figure, is because of one feature that we are assuming into the structure, which is a robust debt service coverage covenant, which is intended to limit the risk that any bond sold would not perform by ensuring that we have at least $1.30 in the account for every dollar that we would owe. So this is a continuation of the thought on the previous slide, really giving an example of how the amount borrowed, that approximately $558 million, would relate to the total production of the projected $3.3 billion. So you see, moving from left to right, we have the projected aggregate TIF amount, which is the aggregate revenue we would project with the 3.5% growth rate to be just over $3.3 billion. We have the debt service obligation, which is the sum of the principal borrowed, the $558 million, plus interest, plus the 1.3 coverage ratio, which comes out to $1.95 billion, which leaves cash after debt service of approximately $1.4 billion in this scenario. Now, I want to really emphasize that this is it is a well thought through and informed projection, but it is a projection. We won't know exactly what we can borrow. We won't know exactly what those borrowings will cost until we actually attempt to enter the capital markets, engage with investors, and get a sense of how they feel about this revenue stream and how risky or not risky they believe it is. So factors that will influence this are the prevailing interest rates at the time, the performance of the TIF district itself. So you can envision a scenario where the first issuance is maybe the most difficult because we won't have any history of revenue performance, but that over time, if the district performs well, the issuances could get easier and more efficient, produce more revenue upfront through a bond sale versus the long-term cash flow. Other aspects that will be included in here are other covenants that investors might require of us, prepayment issues, et cetera. And then there's also, in terms of the amount of work that we could get done, there's inflation, how that will impact the cost of getting the projects done, which could then impact the timing of when the projects could get done. And on this slide is just a little more detail that's behind those numbers that you saw on the previous slide. So here, instead of just having the aggregate production amount of the TIF, aggregate debt service, aggregate cash after debt service, this is showing us those figures in 5-year increments. So in 2030, we would, based on the 3.5% increase assumption, we would expect the TIF to produce just under $30.2 million in incremental revenue. We would anticipate that $24.5 million of that is dedicated to debt service, which would leave $5.5 million of cash after debt service. And then those numbers get better as the TIF goes on, because as time passes and more value is captured and created, there will be more revenue in the TIF account to either pay debt obligations or simply be paid as cash on hand for capital projects. So one of the topics that was, I think, top of a lot of folks' minds last Tuesday and then in the conversations that have happened since has been risk of this revenue stream and the debt that could be associated with it. And so I wanted to spend a little bit of time really discussing our thoughts on this risk. So I think two large conceptual thoughts. One, it is our true belief that the riskier proposition is to do nothing. We have to invest our way to prosperity. We cannot just sit and wait for it to happen. So I think that is a fundamental belief on our side of the equation. Second is, that said, there is risk. There will always be risk in any of our operating activities. Our job is to ensure we are doing the best we can to manage that risk and balance it against the future rewards and take the steps that are available to us to mitigate that future risk. And so there are a number of things that we can do in that regard. The first and sort of the most important, perhaps, is the assumptions that we're making in our borrowing schedules, and that is with respect to the debt service coverage ratio. So if you look at the screen here on the right side, there's a simple chart, and it, I think, illustrates what we're fundamentally trying to do here is for every dollar of debt, if we have a 130% coverage ratio, that means we'll have $1.30 in the bank. So we don't need to be spot on with our projections if we're putting $1.30 in the bank for every dollar we're committing, because we'll have that natural cushion built into the structure. Now, that cushion may need to be bigger, depending on what we learn from the capital markets. When we get to the point of actually executing a bond sale, it could be that investors say, for this first issuance, because of the lack of history, we might need $1.40 for every dollar. And if that makes sense based on the structure and allows us to still get the work done, those are the kinds of decisions that will have to be made as we go through this work, and all of these will be presented to council in the authorizing legislation that would allow us to do one of these bond deals. The other significant aspect of this that we have embedded that will help ensure that we don't get out over our skis here is we're not assuming in one of those super high annual growth rates. So you saw in Jeff's portion of the presentation that up until now we've seen about a 3% increase in the assessed value within this district. Compare that against the other examples, both in the city and in Detroit, where we've seen well in excess of that 3% annual increase. We are assuming 3.5%. So we're not overextending ourselves in the amount of projections that we're forecasting for future revenue. And then finally, with respect to bondholder risk, I know there were questions about that. Investors are very sophisticated in assessing the creditworthiness, credit quality of any of these bonds that we might sell. And as part of the disclosures that we provide in connection with any bond sale, they will be well aware of any of the risks associated with repayment of the debt, and will be able to make their informed choices on how to price that risk in terms of how much money they're willing to pay for any single bond that we might sell. So this next slide goes to the point of the riskiest position for us might well be to do nothing. And we don't need to look too far into the past for an example of what the future might look like with respect to downtown properties if we don't take steps to arrest the decline that is in the office sector in particular, brought on by work from home and remote working. So what you see on the screen is 200 Public Square. In 2018, it sold for $187 million. Late last year, it sold for $65 million. That is 35% of the 2018 price. And you can rest assured that that new sale price will be reflected in the assessed value of that property. And so you can imagine what would happen to the downtown core if we see property valuations decline along those levels across downtown in the office sector. We lose buyers. Buyers who purchase properties in the late teens begin losing hundreds of millions of dollars, and it would not bode well for the future of the downtown core. And so this, if nothing else, this TIF district and the investments that we intend to make as a result of its existence is an effort to arrest the worst of what might come if we were to do nothing. this or me? Okay. So here we talk about impact on other taxing entities, which also got a lot of discussion last Tuesday and in some communication since. And I want to really just emphasize some points that Jeff made and maybe some that were made last Tuesday. I think first and foremost, with respect to existing levies, whether voted or unvoted, the TIF district will not disturb any revenue those entities are currently collecting. So any revenue that is being currently collected by an entity within the county that collects property taxes will not be impacted by this district. Where there may be impact, and this is where we have the philosophical discussion about whether any of this impact would exist if the investments weren't made or not, is on growth in the production of these levies, voted or unvoted. So it's, it's the essential contention of the administration that without these investments, very little, if any, of this increased value would happen. And we just go to the prior slide to see how that fact pattern could play out. What's important to remember is that with respect to voted levies, those levies do not capture the natural value appreciation of a property. So if a property just through the passage of time grows at a rate of 2-3% a year, a voted levy does not capture that. So those voted levies are the levies of Tri-C, the Health and Human Services levies, et cetera. With respect to unvoted levies, our very fun topic of inside millage, those unvoted levies do capture in the ordinary course the value of sort of natural appreciation. But based on our research, the impact of that on the entities that do have unvoted levies is very small and measured in the thousands, not the millions.
Can you clarification if you could? And it's hard to hear if you could speak in the mic. But can we get a clarification when you say voted versus unvoted? Do you mean voted by public via levy or voted by council?
To the chair, voted by the public.
Okay, got it.
Yes. So I think just to reemphasize, nothing about this TIF will remove revenue from the accounts of any of our overlapping entities within the county. The TIF district and the investments that we hope to make with the proceeds it generates will create significant value, but that value would not exist without these investments. And so if you use that but-for perspective, none of the value that could be available in the future would exist without this tool. Once the TIF is done and it has expired, then every overlapping entity will get the benefit of that increased value as the TIF rolls off and all of those service payments become regular tax payments.
And I'll add, in the meantime, there will be substantial sales tax, income tax, admissions tax, bed tax revenues generated by the projects spurred by the TIF district that we believe will benefit these taxing jurisdictions. I want to talk a little bit about oversight and equitable development. I would say the first is that we will be back to council for approval on how any of these dollars are spent. While we've stated an intent of what we expect to spend it on, we will be coming back, and we will be, these are public infrastructure dollars we're spending. So we will be, as a city, in the way that we're spending money, ensuring that that by nature the public infrastructure investments benefit the public, that they meet workforce targets. And when we have a specific development project that is benefiting from the TIF district investments, we will have a project-specific community benefit agreement. We are already in the midst of negotiating a community benefit agreement with Bedrock for their project, which we believe will be a very strong community benefits agreement, and we will be doing the same with every other project that comes out here. We are also continuing to collaborate, and one of the reasons that we worked with this body to stand up the $10 million investment in the Built Environment Workforce Program is to make sure that our residents are primed to benefit from the development that is coming here. We are also committed to tracking our results. And the research that we've done with some of the other cities that have done TIF districts, they have not tracked community benefits that are coming out of that is a piece of what we anticipate doing. So just to wrap up and clarify what this legislation does and does not do, as I mentioned earlier, it does not impact existing TIFs or raise taxes. It also does not prohibit us from, if there is a site within the TIF district where a developer needs a specific TIF for their project, we can agree to a TIF on that project and take it out of the TIF district. I mentioned a couple times this does not allocate any revenue or spend any city money. It does not cost anybody out of pocket for money that they are already getting. It cannot finance private development as a matter of state law, as we talk about what is the nature of public infrastructure here. And our legislation is clear that we cannot use it on sports stadia and arenas. So what this does do is it establishes the district, it defines the geography, sets the base value, and lets us come back. And again, not allocating bond issuance here today, not allocating dollars to projects, just creating the tool. That's it. Happy to take questions.
Thank you. Before we go to any questions, and I do have Councilman McCormick and Councilman Polensek so far. Anybody else want to? Okay, I'm going to bring up Zach Schiller, but I see Mora and Santana, Bishop. Okay. Come on up, Mr. Schiller. Mr. Schiller, we're going to start out with about 10 minutes for public comment, but if you need to go over and anybody have any questions for you, then they can work with you on that, okay?
Thank you.
All right. Mr. Schiller, please announce who you are and what organization you're with.
Sure. Chair Griffin, members of the committee, my name is Zach Schiller, and I am Research Director at Policy Matters Ohio, a nonprofit research institute. I have copies of my presentation.
If we could,
Have some others here, too.
could we get passed out to everybody? I think we got
Is that
enough.
enough?
Give two to.
Just one page.
Give two to them.
Shouldn't go on too long.
Here. I'm going to get one and then, here we go. Good.
So we appreciate the opportunity to speak at this hearing on the proposed tax increment financing for downtown and part of the Near West Side. At last week's hearing of the Development Planning and Sustainability Committee, we raised a set of questions about the proposal. City officials answered some of them, but not others, and they provided a sometimes incomplete account. I would like to lay out briefly some of these issues. The staggering 48,000 new jobs and $5 billion in additional tax revenue that's been estimated have not been sufficiently supported. We were told a couple of studies by Implan, which does econometric modeling, support these. We need to know more. What assumptions were made to come up with these astonishingly high numbers? While appropriately noting that natural increase in assessments of existing property will not lead to increases in tax revenues for many voter-approved levies, city officials did not outline what the TIF's actual effect on other taxing jurisdictions will be, on the county, Tri-C, the Metro Parks, or the Cleveland Public Library. And I would add, since we just heard this just now in the presentation, to assume that there will be no increase in value, that there will be no new development, no new construction, is effectively what they've just told you. They're saying there would be nothing without this investment. I think that over a 30-year period is clearly incorrect. What could city residents lose in services from these entities because of the TIF fund diversions? We've not heard that. Why did the school district get protection when all these other jurisdictions didn't? Well, that is welcome. It is not, as city officials said, because that is the default position in the Ohio Revised Code. To his credit, Mayor Frank Jackson also protected the schools from certain large abatements, but this does not happen on its own. Why don't city officials just own up to having made that decision and acknowledge that they are choosing to protect the schools in a way they are not with other valuable public services? The administration continues to repeat that the TIF will not finance private development or be used to finance any sports stadium or arena. Yet large sums will be used on infrastructure that will support the Brown Stadium, and a separate TIF, as you've just heard, carved out of this one, will be set up for Dan Gilbert's Bedrock Management Services, LLC. Will payments under that TIF go toward financing the Bedrock development, i.e. go to a private developer, as we've just heard? This will not. Will funds from that TIF flow to support spending in the neighborhoods, as we've been promised with this downtown TIF? Such questions are especially appropriate in view of plans to spend $400 million on riverfront infrastructure. The city itself will see funds diverted from its own property tax levies to the TIF fund. How much will this add up to, and how will those funds be made up? We've heard this as being described as thousands of dollars. I'm not so sure that that is accurate, but I think that your chief financial officer should be able to give you a dollars and cents exact figure. These questions have yet to be answered. City officials persist in saying that this, quote, does not raise taxes, unquote. But if tax revenue is diverted to the TIF as they expect, it inescapably will mean that city residents will pay more than they would have otherwise to support levies for Tri-C in the county that were set up to raise specific sums each year. You will have voted for tax increases. Has the city made estimates of what these increases would be? Much discussion of the proposed TIF has centered around whether it will generate the revenue that's been projected and whether the city would be responsible for paying off the bonds if the TIF fund couldn't do so. The ordinance was amended to make it crystal clear that the city's general fund will not be responsible for repayment. While that's a positive and a worthwhile step, has the city studied whether this is in fact fully protects it based on the history of TIFs around the country that went underwater? It's concerning as well that in making projections, the city did not take into consideration what happened to property values during the Great Recession. We were told that in the committee last week. How are they so certain that this won't happen again over 30 years' time? The administration told the DPS committee of the various outside entities that have been employed to advise on the TIF. Have any of the key personnel at these contractors done significant work for Bedrock? Significant questions surround this important proposal. As much as we all would like to see it turn in Cleveland's fortunes, a major diversion of public resources from critical services should not go ahead without clearly spelling out the risks of the proposal and who will bear them. If you should go ahead anyway, we recommend that you arrange up front to share additional municipal income tax revenue with affected taxing entities, as the state already mandates for schools and sometimes counties in large TIFs. If the city is so confident that there will be large additional amounts of such tax revenue generated, it should have no problem sharing that with public entities that will lose revenue because of the TIF. Consider limiting the TIF to the Bedrock area only, or limiting the TIF so that it covers a smaller area than the 18% of assessed value in the city that it will affect. Obtain estimates of the loss of city revenues from its own property tax levies under the TIF proposal and the increases in taxes that city residents will experience in connection with fixed sum levies. Review projections to include changes in property values during the Great Recession. Examine the experience of other cities that have seen their TIFs become unable to pay their obligations, and consider what other steps the city should take to protect itself in case that should happen. Ensure also that the city make good on its promise that money doesn't go to private developers or any sports stadium or arena by including the separate Bedrock TIF in that promise and excluding from TIF investment the land bridge to Brown Stadium and other infrastructure tied to the stadium, Rocket Mortgage Fieldhouse, Progressive Field, or other sports facilities. Thanks very much for the opportunity to comment.
Thank you so much, Mr. Schiller. Very informative. And I first want to, in addition to thank you, if the administration wanted to say anything, or did you have any comments before we go into questions and answers from my body? And then if any of the council members have any any of the members want to make any statements, and then administration, and then any of the members.
Sure. Through the chair, thank you, and thank you, Mr. Schiller, for the commentary. I want to maybe be a bit more pointed on the overlapping entity question. And there was some commentary to this effect last Tuesday. My job as the city's CFO and finance director is to worry about the city of Cleveland. And that's what I'm here doing. Over the decades, as the city has declined, as suburban communities have done just what I'm doing, looking out for their own interests, and attracted businesses outside of the core of the city, outside of our neighborhoods, no other entity has come to our rescue. And so what this is an effort by the city to do what is allowed under state law to bring the resources we believe we need to invest in our city. And, you know, the inputs that we've taken into that analysis are certainly worthy of discussion. You know, I would note that on the Great Recession point, I, for one, am fairly confident that we're not going to see another event like the Great Recession, not because we're not going to see any economic calamity again, but one thing that I think we learned in the way the federal government responded to the 2020 economic shocks, and one of the lessons they learned through dealing with the Great Recession is that we can't have that happen again. And so from a federal policy perspective, the U.S. Congress and the Federal Reserve are not going to allow our economy to tailspin in the way that it did in 2008, again in the future. We now have a setup in which the federal government will step in and provide resources necessary to avoid that outcome. And so I think that gives some comfort in how we are thinking about the potential impact of another economic downturn in the projections for this TIF district.
Anything you want to add, Mr. Epstein? All right, does anybody have any questions for Mr. Schiller? I have one that I did want to ask you. Could you clarify and help me understand how you, in question number 6, where you said that this is, does not raise taxes, but you're saying it inescapably does mean that city residents. Could you help me understand how you got the calculations for that, if you could, Mr. Schiller?
Chair Griffin, certainly. There are levies, Tri-C in particular has $227 million of levies that are set to raise a fixed sum amount. So unlike, say, most voted levies, which would fluctuate, it has to raise that amount every year. So if you deduct what would otherwise be going into that, because some of the revenue is being diverted into the TIF fund, it's not going to that purpose, everyone else will have to pay more.
And that's why I wanted you to explain that more, because I mean, and I see the administration shaking their head no, and I specifically asked that question to one of the firms that was reviewing that this weekend. But did you guys want to clarify what he's saying? Because that was a question that some of the council members had too, and we want to be clear when we're out here making statements that we don't feel like we're misleading anyone.
Yes, to the chairman, thank you. So based on our understanding, our work with our outside legal advisors, the dollars that are being collected today, if Tri-C is collecting $100 today, they're going to collect $100 tomorrow. Now, when there are future tax levies, which are certainly not guaranteed to pass, they're not even guaranteed to be presented to the voters, let alone pass, there might be some modest impact, and I believe Councilman Harsh addressed this briefly on Tuesday, that the properties within this district will be capped at the base value. So there will be the tax levied on that base value. And if that causes some modest spillover effect to other properties outside of the district, that is a theoretical possibility, but it is I think, fairly small, hard to quantify, impossible to quantify, since we do not know what future levies might be presented to voters. It's a theoretical issue that I think is useful to acknowledge, but hard to plan around when we're having concrete discussions about this proposal.
Well, as they're planning for projections in future years, I can anticipate them trying to have larger millages, larger outside millage that they go for in order to try to cover the gap. To Mr. Schiller's point, will that then mean that taxpayers will wind up seeing an increase?
Through the chair, without specific numbers, it's really hard to address that. I think we're talking about 3% of Tri-C's overall jurisdiction. So this is a small component, and it's only on the increase. And it is, through some work that we have done, it's become clear that across the county, the property class that has done the best and has begun to outperform commercial is residential. Now, this district only covers commercial, because there's almost, I don't think there are any single-family homes that are covered here. It's only large commercial buildings, and that could include multifamily residential, which as a class has just not performed as well. So I think the reality is, without the investments that we are proposing, it is not a guarantee that on a net basis, the assessed value of this district would grow. To Mr. Schiller's point, there might likely be some investment here and there, but on a net basis, if we see office buildings decline in value like 200 Public Square, there's not going to be enough other development to offset that loss of tax revenue.
But isn't it right that right now, that we're setting up the district based on projections from January 2024, you want them to be lower because then the appreciation to be higher when it appreciates. So you want all these buildings to come in low right now, right?
Well, through the chair, we don't want them all. We do
Because
not
we have
want-
about 5 of them now that are underwater.
I'll say this: we, through the chairman, we are not hoping for massive declines in value across the city. We want properties in the city to perform well. We want investors to make money. We want people to do business here and believe that they can make money doing business here.
But we know these investors are watching each other. And if somebody submitted and got a $65 million valuation on their property, it's not long before everybody else going to follow. And everybody else going to try to bring those appreciation about, which in my understanding, that helps the TIF district because then that means that the properties can appreciate at a lot faster rate, which means that we can gain a lot more money if it goes.
Yes,
and
and
that's what I'm understanding.
To the chair, that's correct. And what's also correct is that these property owners could challenge the assessed value no matter what.
That's my point. That's why they're all going to
They're already
try
doing
to
it.
drop it down. Any more questions for Mr. Schiller? I'm
I
gonna let you.
clarify something?
I'm gonna let you, if you could pivot and answer to their question, but I do want to make sure I get a question from the body. Anybody else, Mr. Schiller, Ms. Santana?
So this was going to be my main question to the administration, but you brought it up through the chair. And are you representing Policy Matters?
Yes.
You've done research on this. Okay. So through the chair to Mr. Schiller, thank you for your comments. I'm curious to know, back to the property taxes, has Policy Matter done any research that potential residents, property owners, while their market value will go up, or their property value will go up, their taxes will go up? I think you mentioned that. I know you were talking more about the levies, but I'm curious to know, in surrounding neighborhoods where property tax values go up, will property taxes also increase if it's based on the property's assessment?
Chair Griffin and Santana.
And answer your question too that you have for the
Yeah,
business.
I do want to clarify something here also, but that's a much more complicated answer than you might think. As my colleagues sitting here have said, we have in the state of Ohio, House Bill 920, the constitutional provision under which voted levies, if there's simply an increase in the value, the tax rate comes down. So a mere increase in assessed value does not by itself, at least for the whole taxing district, lead to an increase in the tax revenue on those voted levies. It will on the 10 mills of inside millage that the council, that the city and Metro Parks get. But the vast bulk of the millage is voted millage, and it will only increase according to new construction that's taken place in the whole area. Now, you as an individual homeowner could see a huge increase if your individual home has gone up in value much more than in the whole city of Cleveland. So you could, and I'm sure are hearing from your constituents, that they're seeing big increases depending on what neighborhood they're in, depending on what property they own. And that's a very serious issue, and we have in fact done considerable research and come up with a proposal to try and deal with that at the state level. It's called a circuit breaker. And the idea is that you wouldn't have to pay more than a certain amount of your income in property tax, or the state would step in and pick up at least some of the rest. And we're in the middle of discussions with state legislators, and we're hoping to have a bill introduced. We think that that's a major solution to this important issue. I did want to clarify something in relation to this question of tax increases. I think if you read my testimony carefully, you'll see that what I say is that it will mean that city residents will pay more than they would have otherwise. This is just one example of the many cases in which the city officials are telling the truth. They're giving you something that's technically accurate, but it isn't really, in fact, the whole story. And that's what's happening here. Yes, it's true, they wouldn't see a tax increase from what they're paying right now. So no disagreement there, that's truthful. However, with any kind of increase that isn't covered by House Bill 920, any of that new construction, of which there will be some over a 30-year period, to say there will be no new construction and there would be no otherwise increase in how much tax revenue would be generated in that area, I think it's fanciful. And so that means there will be money diverted into the TIF fund that otherwise would have gone to pay those fixed sum levies, and those residents, your constituents, now it may be a very, very small amount, I'm not saying it's going to mean their taxes will double, but it will mean that compared to what they otherwise would be paying, they'll be paying more. And I think it's just one of the many issues that have been kind of occluded, have been, okay, let's acknowledge that and then say, but it's only X amount because we've done a clear estimate of what it might be. And then you can make a decision on whether that's worthwhile instead of acting as if that doesn't exist. And I think the same thing is true when it comes to the money to the private developer. Yes, no money out of this district, TIF district, will go to a private developer. Will any money out of the Bedrock go to a private developer? And if so, isn't that really all a part of this proposal? No, it isn't legally speaking. You're not acting on the Bedrock TIF today. But you're acting on something that's supposed to raise $400 million in infrastructure for the riverfront, for the Bedrock development. Is any of that TIF money going to go to Dan Gilbert and Bedrock? If it is, then it should be acknowledged today. And maybe you'll decide, fine, that's a part of the financing, that's how we do TIFs. Makes sense. But let's acknowledge it up front. Let's not sweep it under the rug and act as if we're not giving them that money. We don't even know if it's going. Maybe it isn't, for all I know.
Okay. Councilman Brian Casey. Yeah, but we are just asking questions of Zach Schiller now. Okay, Councilman Brian Casey.
Thank you, Mr. Chairman. Mr. Chairman, to Mr. Schillinger. You at Ohio Policy Matters, correct me if I'm wrong, have studied TIFs across the country?
Chair Griffin, Councilman Casey, actually only modestly, not as much as I would like. Yeah.
Okay, the ones that you have studied modestly, are they successful for the cities? Mr. Chairman, to Mr. Schillinger.
Chair Griffin, Councilman Casey, I think that depends on the situation.
Okay. And then in one of your recommendations, it says excluding from TIF investments the land bridge. I can live with that. Brown Stadium and infrastructure tied to the stadium, Rocket Mortgage Fieldhouse, Progressive Field, or other sports facilities, and then also private developers. Mr. Chairman, to Chief Epstein, or Mr. Schillinger, isn't all development going to be private?
To the councilman, through the chair, public infrastructure investment won't
Okay,
be private.
not that, but I'm saying, so if we come in and, I don't want to use Bedrock because that's too big, but somebody wants to redo a building on the corner of East 9th and Lakeside, right? They're in the TIF district, they get the TIF. But isn't that a private developer doing that? So can somebody differentiate
Yeah,
between
sure.
what this private,
Yeah.
not including private developers, why we're
Yeah,
excluding?
through the chair to the councilman. So this goes the difference between the 40 TIF, which is what the TIF district is, and the 41 TIF, which we typically do. For a 41 TIF, where we bring the chain of title to council, and then we do the TIF legislation, the proceeds from that project TIF can benefit private development. We can agree, and we have many times, to give the increase in tax value for the non-school piece that is generated by the development back to the developer to pay off bonds, to pay for some of their project. The 40 cannot be used that way. The proceeds can only, this is a 40, can only be used for public infrastructure.
Okay, all right, thank you. Thanks for clarifying.
Okay, this is questions strictly for Mr. Schiller, and then we will get into any final questions that we have. I know I had a couple of people on the list, but questions specifically for Mr. Schiller. Okay, Councilman Jones.
Thank you, Mr. President. First of all, I'd like to thank the distinguished gentleman. I've been reading some of your stuff in the past, so. And I've had the opportunity to see that you had someone who made a presentation to one of our committees with Anthony Chairman as the chairman. And I just thought that some of the questions were, well, good questions and questions that the administration certainly wanted to know a little bit more about the financial impact of the TIF on other entities. My question to you, because I've read quite a bit here, and just let me preference with making this statement. The city of Cleveland, unlike any other city, unfortunately, is moving at a snail's pace in terms of growth. When I look at what's happening in Columbus, when I look at and I travel to other cities across the Midwest, when I go to Nashville and I often travel to California and other places, they're growing and their growth is at leaps and bounds. And we're still looking like the old city of days of old, just broken down. And so my question, Mr. Chairman, and this is, for me, sitting here, I'd like to see our city be competitive like a Nashville. They have cranes all over the place, building every which way we can potentially build. Bring in more people to come into the city of Cleveland as relates to population. I want to see economic development. And so sitting here as a citizen all my life in the city of Cleveland, I feel I'm at a disadvantage of not being in a place where it's growing, it's lively, is healthy, and we have a place that we could be proud of. And at the same time, education is important. And our educational system needs to be the political will at this table and the corporate will, and I'm glad some of the corporate community is here, and I hope they're listening. You need to invest back into the city of Cleveland. You need to participate. You need to get involved. You need to start really putting some skin in the game in the city of Cleveland. And I haven't seen that kind of investment from the corporate community. So even though these TIFs that we're sitting up here are tools and incentives, what kind of incentive, if I could call you Peter, what's your last name? Schiller. Schiller. I just want to make sure I'm saying it right. So Mr. Peter Schiller, what are some of the tools that we could use to really, truly bring economic development into the city of Cleveland? Is there something that you do like?
Well, Chair Griffin, Councilman, we do most of our work at the state level. And I have spent most of the last 20 years trying to keep our General Assembly from cutting our income tax, which they have cut by more than half, more than, I'd say, about $8 billion a year. We believe that we need to fund public education so that all of our people are well educated, and that includes from pre-K, it includes funding childcare, it includes obviously K-12 and even higher ed. And my organization, I think, as much as anything over the years that I've worked there, has supported those kinds of investments as the kinds of things that will actually lead to stronger economic development. And so I guess I would put it that way.
Yeah, see, so you see what I'm saying? You understand where I'm coming from? The issue is we have to use something. We have to do something. And so the issue is, in my mind at least, is, and I appreciate your background, I appreciate you fighting for us, and I agree with you, the state is just horrible in cutting funds. They have continued to cut funds here in the hundreds of millions of dollars from the city of Cleveland over time. And so how do we create tools that we can have as a city to get us on track to economic development is the question. So if that means sitting down, doing a deeper dive, if it's not TIF, then the question would be for policy matters. What, as an elected official, what tools can your organization help me to to say, hey, we can bring this as a tool to the table that will do all of these things and keep us whole.
Chair Griffin, Council.
And that's always the challenge, isn't it?
Yeah, no, we will work with you on that, and we appreciate that opportunity. I think the point that I'm trying to make in today's hearing is you're making a very momentous, major decision without knowing all of the facts. That's my position here. And I think I've been now, the other one I had to watch because I was in the hospital, but, you know, I've heard this described, I've seen the presentations, and we just have way too many things we don't know about this. So maybe, in fact, it's a decent proposal, but I can't call it a decent proposal when we have all of these question marks and what I would say as, you know, like 48,000 jobs. 48,000 jobs. The Intel development outside Columbus is supposed to generate 3,000 permanent and 7,000 construction jobs. That's a $20 billion investment. You're saying here that this is going to generate almost 5 times that amount. I mean, is that really credible? Yeah, I'm sure there's a implant study that somehow supports that, but that is one heck of a statement. I mean, you shouldn't just pass that off and put it in a PowerPoint. You know, I just feel that we aren't hearing the full story, and we need to hear the full story when you're talking about the diversion of resources here that we're talking about. Yes, it's true. These, for one thing, it is city resources because the city does have property tax revenue at stake here. My understanding is that's where most of the inside millage is. And I think you should know how much the city itself is transferring from its own fund into the TIF by doing this. But when the county loses that revenue, who are the people getting those county services? More often than not, they're your constituents. They're Clevelanders. So yes, it's true, you're not responsible for Health and Human Services, and I credit you a great deal for all the things that you've done with ARPA money, and I know that you've stepped in and done things that aren't necessarily something that's required of city councils to do, so I applaud you for that. But when you cut out those kind of funds, that's going to hurt city residents. Yeah, it'll hurt county residents also, but you look at who's using these services, and you can see in most cases the majority of them are city residents.
Okay, let me make sure that I reroute this because this is very important and I don't want this to become unwieldy. Right now, we have a guest, Zach Schiller from Policy Matters. If you have a very brief question for Zach, then I'll listen to your very brief question for Zach, but then we want to get back to asking questions of our panel to make a determination on how we want to move forward, okay? So the people that had a question for Mr. Schiller was Councilman Polensek, Councilman Bishop, and Councilman Conwell. And please, once again, if you cannot do your normal 10 minutes, because I want to give enough time for the administration to respond so we can deliberate on what we want to do.
Yes, thank you, Mr. Chairman, because I'm down on the other list as well. And to my honorable colleagues, to the administration, and to Mr. Schiller, first of all, I appreciate your handout, and I appreciate the questions and concerns that you've raised. And I would hope that in the future that Policy Matters would be look at other issues that come before us as well for thoughts and suggestions and recommendations, because I think you can be very helpful. My specific question is this. In your summary at the end as it pertains to suggestions or recommendations, you indicated you would suggest a smaller geographical area. Do you know what that is? Do you have you defined a geographical area or a map? Because you've indicated 18%. This is 18% of the taxing revenue for property taxes is coming out of this area, proposed TIF area. Do you have a suggestion as it pertains to a smaller area?
Chair Griffin, Councilman Polensek, I haven't formulated a specific suggestion.
Okay.
I think that what I found when I looked at the TIF district area was that it looked peculiar. It's quite a jagged shape. It's not just downtown between the river and the shore and the shoreway and the lake. That you could sort of, it's this very jagged outline, which to me raised questions about why are certain properties being included here and not others. I don't know the answer to that. I guess my view was this puts at risk various things that I've suggested in my comments, and so reducing the scale of it would reduce that risk. But I don't have a specific, I mean, I didn't say, well, lop off the near west side. I mean, you could do that, I suppose, but
Okay.
I didn't come up with
Yeah,
that.
well, again, because I looked at the map too, and I the same questions, I thought about why is this crazy line going down the river, and then it goes over into Ohio City, Tremont, et cetera. I was just wondering, again, if it was going to be just the downtown area, including the proposed bedrock, why not just in that, when we talk shore to core, why just not in that area? So obviously, those are other additional questions and concerns that we have. But again, I'll stop there. I thank you very much for coming to the table, sir. Thank you.
Thank you, Councilman Bishop, for Zach Schiller.
Thank you, Mr. President. Mr. President, I'm going to try to stay focused on the questions I have for Zach and not the administration, but they kind of overlapped a little bit. Through the chair to Mr. Zach, my question kind of encompasses statement number 2, 3, and 5 a little bit, because I'm trying to grapple with the fact that we're going to have property tax increases, and so how? But what I'm lacking is from the administration is their explanation that it will not affect our other partners like the county and Tri-C and Metro Parks. When in question 5, it says the city itself will see funds diverted from its own property tax levies to the TIF fund, and how will they make this up? So if number 5 is true, number 2 has to be true, where funds will be will be diverted from these other organizations like Tri-C and the Metro Parks. How are we going to Mr. Zach, how can we understand that the effect on other districts will this new TIF district have? How can we understand that? So what I'm trying to do is I'm trying to understand how these other entities will be affected. When in number 5 you say the city will be affected by the diversion of its share of those tax revenues.
Mr. Schiller.
Chair Griffin, Councilman, I think that I made some effort over the past few months to try and learn, for instance, with the county, how much would they be affected? And there was actually a hearing before the county council where the county executive presented, or their representatives presented some information on the amounts that they thought could be diverted, which were a lot smaller than, they didn't seem to really comport with the kind of large numbers that we're hearing from the city. You really would have to ask the financial officers of those organizations how they map it. We know that the Metro Parks has $500,000 of inside millage that will be affected, that we'll see with all of the increase that this TIF district shows. How much is $500,000? Maybe it's not much. I don't know. I haven't examined the Metro Parks finances. Tri-C, we heard at the DPS hearing an estimate that was said to be in the hundreds of millions over this whole time period for Tri-C. I don't know that to be true. It sounds awfully high to me. They were later quoted in the newspaper confirming that number, or those numbers. We don't know, and that's my point. We don't know. You should know before you make a decision like this. The city, I could go get my folder and list for you what the city levies are that are affected if you like. But I mean, because I don't look at them closely, I can go do that.
If you can get that to Mr. Tytron at the end, that'd be fine, because then that way we could have it and go from there. Yeah, because I want to make sure we do that. Councilman Bishop?
Okay. All right. Well, that concludes my question for Mr. Zach.
Okay. Councilman Conwell for Mr. Schiller.
Yeah, do want to see several things I believe in is a circular economy. You build up downtown also, as Councilmember Joe Jones was saying, and if we can create jobs and we can put people to work with these jobs, And when people are working, then you can keep crime down. Also, when you create jobs, you would be able to, they're able to take care of their families, and we could fight against poverty. So I'm looking at that also. The other thing that I'm thinking about, 'cause I'm reading your stuff here, I see a lot of your assumptions, is a seamless city. You build up downtown, but at the same time, you build up Ward 2, or you build up Glenville and Huff and parts of the west side together. You make it seamless to fight abject poverty. When you have jobs, though, you're going to bring in more people. But you're saying in the fourth, number 4, the administration continues to repeat that the TIF will not finance private development. That's what you're saying. Comment or be used to finance any sports stadium or area, arena, you saying, arena? Yet large sums will be used on infrastructure that will support the Brown Stadium. You know we own the Brown Stadium also. It's one of our assets. And a separate TIF carved out of this one will be set up for Dan Gilbert's. I mean, do you know these things? Are you making assumptions? Are you making a strong assumption, or what? To the chair.
Chair Griffin, Councilman, the administration has said that in both committees, that they expect. I think, in fact, it's on a slide. Could you perhaps go to the slide where you mentioned that there's going to be a separate TIF for Bedrock?
I don't know if that slide is in this deck.
All right, well, anyway, in one of the slides, maybe it was in last week before the DPS committee and not this one, but you can ask them, they're here. But the intention is to set up a separate TIF for Bedrock in that area. And because that's not a part of this, that's not a part of this discussion in the sense of you're not authorizing that. And yet, that will take a chunk of that downtown real estate and put it in that TIF where the money can, and I would assume, but we don't know really, some of that will be used to help finance the Bedrock development, as Mr. Epstein has described happens with these 41, that section of the Ohio Revised Code, that in those cases, money from that TIF can be used by the developer to help finance the project. Now, we don't know that because they haven't told us. I'm surmising.
That's what I'm
that that's-
saying. You're making
but-
an assumption.
Well, I'm surmising that let them tell you today that that won't be used for that purpose. Why else would you be setting up a separate TIF in that area if not for that purpose?
You want to answer that question?
Thank you, Mr.
To
President.
the councilman, to the chair, yes, I mean, we intend to come back for a 41 TIF on the Bedrock project to be used to support that specific project. We've been upfront with that all along. Like that, to me, doesn't change anything at all about this conversation.
Yeah, with me, I'm thinking about what Joe Jones is that I want to see the city rise, but when I drive and I ride through the city with other people, when I drive through the city, I see a lot of abject poverty through the chair. And you got to be able to attack that as well at the same time. So I don't know, do I support the TIF yet, but I would love to see some systems in place that we could use dollars to also look at, like you mentioned, almost the southeast side, because when you ride through there, it's sad seeing children. I mean, when you visit households and you see water is not running, you see some houses, it's too hot in the summertime, too cold in the wintertime. When you see children just going to school just to get a meal, and then you want to build up downtown and you forget about them as well. I want to see systems in this also that help fight against abject poverty. I just don't want to just build downtown, but I want it to be simultaneously with this tax incremental finance piece, and some kind of way we can be creative. Through the chair, have you seen that in other cities?
Chair Griffin, Councilman Conwell, I'm not acquainted enough with all the other TIFs elsewhere to know if it's been used in that way. You could certainly investigate that and see. And, I want to second that I agree with you 100%. We need desperately to reduce poverty in this city, and we don't object to improving downtown. This is not some effort. I don't think you've seen in any of my comments something that's aimed at saying we shouldn't be investing in downtown. I think, your comments are very well placed, and I just think that if a key goal here, as you say, and I agree with you, is to reduce poverty and all of the horrible conditions that we see around our city, will the resources being used in this way really accomplish that? Or, more importantly, do we even know enough to be able to make that decision?
Yeah, it's a lot of known unknowns. It's a lot of known unknowns. Through the chair, when you look at the other stakeholders, and I asked a question about risk to the chief of staff last week, the risk of you dealing with Tri-C, CMSD, Health and Human Service levy that's on, right? Matter of fact, issue 26. I don't want to take away from these things to fight against poverty also, and you turn around, but you're building up. It's like a Robin Hood kind of thing in a reverse way. You're building up downtown, although we need it, and we need to put people to work, and we need a school system that's going to educate our children so they can go to work there and they can take care of their families, because work is therapeutic, and by putting people to work, you keep crime down also. So I'm looking at all of that, and through the chair to Chief of Staff, is there any systems in place that we could divert some of the dollars from there, and we'll come up with a number to build up the neighborhood, because it should be seamless. You should have a seamless city. Through the chair to the Chief of Staff.
So if you want to state what you stated earlier, that you just said earlier.
Yeah, through the chair to the councilman. So I think agree. The city should be seamless, and every neighborhood should be a safe, vibrant place for people to live and enjoy their lives. It's really important, though, when we're talking about this TIF district, that we remember and keep in mind that we have to ensure, for this to work, we have to see the increased value within the district that we're anticipating. To get that increased value as close to a reality as we possibly can, we have to invest the money in the district first, complete those projects, and then when there's excess proceeds on top of what's needed to pay debt and to pay the rest of the cost to complete these projects, that's when we can see really tremendous impact in our neighborhoods.
But can I do this, Chief and Director, please? We're just setting up the tool today. When we get to the bonding side of this, that's when we would have to sit down and negotiate what you're talking about, Councilman, and Councilman Jones is talking about. That's when we will literally have the nitty-gritty conversation about what percentages go to pay this off and what percentages go to the neighborhoods to build up some of the neighborhood infrastructure.
Right.
Okay?
That's where I'm at, Mr.
Okay,
President.
so that's why I'm jamming so much information. Today is just to set up the tool, and then we'll go from there, okay?
And I'll say this in closing, Mr. President. When you see certain areas, east side as well as the west side, when you see crime in those areas, you see a lot of blight. You see that people don't care, and the residents feel like you don't care. And when they see downtown being developed, and then you still see abject poverty with children running around in the community, when you see vermins in people's homes, when you see children going to school just to get a meal or take a shower, but you building up downtown, that's not right. So, Mr. President, I'm there with you saying, we look at the bonds, what percentage would go to fighting against abject poverty in our community? I think that's a good thing right there.
Awesome. Well, first of all, I want to thank Mr. Schiller for coming and giving us, did you have a question for Mr. Schiller? Okay, first of all, I want to thank Mr. Schiller for coming and giving some responses. I agree with Councilman Polensek. I'm going to have a shameless plug. When I was a young radical with an afro and beard, I helped start Policy Matters. So that's why I value the organization so much. I was one of the original board members. So we do value what you said. I do think that we got some things to weigh, but I do want to make sure that we stay in contact with you as we talk about the bonding side. If this is goes across the day, we do want to make sure we talk to you further because, as you can see, this is going to be a larger conversation, and we're going to continue to be talking about how we do these things, and we want to make sure we work with you, okay?
Mr. Chair.
Here's the other thing, if this passed, when I look at policy matters, you got to manage policy, because things can shift on you. If you don't manage it, then the outcome measures will not be good, especially on how to make a city seamless.
Got it, Council.
Policy matters can also help us with that, when managing the outcome measures from this policy here.
Got it. And thank you so much, Mr. Schiller.
Thank you.
And we may have some other questions, but keep staying in touch with us, okay? I want to, last point, but then I need to get into our rotation so that we could, you do want to try to pass
Appreciate it.
this
I'll be very quick.
Okay,
I just want to point out the slide that's up here in terms of what this is doing today, which is
Yeah.
just setting up the tool, as you've emphasized. This is a long-term project. It's a 30-year TIF. There are many things that are just impossible to know today. It is impossible to know exactly what it's going to generate. We just don't know. It is impossible to know exactly what impact it is going to have on taxing jurisdiction. The only thing we know for sure is that nobody's getting less than they do today. What is the growth rate going to be? We don't know exactly how many jobs the projects. All we've done is put forth the best information we have here today, and our commitment is to continue working with the body, to work with our partners to make sure that this benefits the community as broadly as possible.
Okay, so I'm going to go into our line of questions. I'll start off, and then I have Councilman McCormick, the majority leader, Councilwoman Santana, the majority whip, Councilman Mike Polensek, Moore. Who else do we need? Anybody else? House Jones, Bishop. House Jones, Bishop. Anybody else? Okay, that is the lineup. House Jones, Bishop. So I'll start off, then we're going to McCormick, Santana, Polensek, Moore, House Jones, and then Bishop. Did I miss anyone? Councilman Hairston, did you want to give any input? I just want to make sure that you want to give input. All right, you want me to put you in? Okay, all right. Okay, so just a couple of things, and once again, this is one of those things. The first thing that I want to make sure that I understand is how are we overreaching our bondability? Does this put us in a position where we're jeopardizing our bond authority? And how does this impact our bonding authority and ability?
To the chairman, so we would not be, when people reference our bond authority, our ability to issue unvoted debt within our inside millage, that's really when we're talking about general obligation bonds. So in this case, any debt issued, whether it's by us or a third party on our behalf, would be revenue debt secured solely by the revenues produced by the TIF district. So it would not have any legal impact on our ability to continue our normal, ordinary course general obligation bond issuances to invest in capital infrastructure across the city.
Okay, thank you. The other question that I had, because you answered a lot of the questions, and just for full disclosure to everybody, we got a lot of feedback. We actually had learning sessions with Squires. We actually did reach out to the Greater Cleveland Partnership and was able to get a group out of Columbus called the Montrose Group that gave us some background on looking at other cities. We did talk to, I did, and several other members did talk to John Cranley, the former mayor of Cincinnati, to get some background on this. And then we also did reach out to the law firm of Retzel and Andrus to give us an overview as well. So we've gotten a lot of independent feedback from everybody, and most people's conversations are consistent with each other. I always look to see if everybody's going to align with each other, this is a pretty decent tool that we should consider utilizing for our city. However, we do have a different makeup because we have more levies and other things than other cities. For example, Columbus just went for their first levy for their community college this year, where we've been supporting levies for our community college for several years. So there are some differences, But for the most part, I did look at other cities, and we did do a tremendous amount of research, and the policy staff did a tremendous amount of research as well. So I don't want anyone to think that we didn't do a significant amount of due diligence in looking at this process, and just want everybody to recognize that, okay? The other thing that I do want to make sure that I understand is, how soon do Vertical, went to Mr. Schiller's point, how fast do we need to start seeing Vertical development in order to set up those, in order to accelerate those TIFs? It's my understanding that until really, the horizontal development won't make it appreciate fast, but the vertical development, how much of an impact does that happen? Does that have on the TIF and the acceleration of the appreciation?
To the councilman, in the projections that we've done, it's just a flat, that we did 3.5 to 5.5%. I think from a policy perspective, I point back to the Opportunity Corridor, where the announcement of that project, the subsequent construction of that public infrastructure project over the last 12 years drove substantial property value increase. And so I think that while the vertical is important because that drives value in and of itself, the passage of the district, the announcement of groundbreaking on these big public infrastructure projects will in and of itself drive additional development interest in the city and drive additional value.
Thank you. What tools will we have if this doesn't work, or we see that this TIF district is not working? And I'm really seriously contemplating trying to put in place a tool for any future councils to be able to dissolve the district or to be able to move away from the district if we see that it is having a detrimental impact or not performing the way that we have. What tools do we have in the current legislation, or do we need to add something in there to make sure? Now, of course, we know that this is built upon being patient and letting the properties appreciate over a period of time. However, if we see something that's catastrophic to the city, what gives us a fail-safe and an emergency in this legislation? Or that's something that we need to consider.
To the chairman, I would caution that once we start borrowing money, and securing those borrowings with this revenue, then at least to the extent needed to pay that debt service, the TIF district will need to exist.
Yeah, I totally get that, but my point is, if we're going to be doing individual TIFs, director or chief, but per project, then let's say if the Bedrock or the Lakefront or one of those projects are being developed, and then let's see, and we'll still be committed to the bonding if we pass bonding for those individual projects. But if the TIF district is not working, are you saying that the TIF district would have to be in place in order for those individual 41s that we would be TIFing?
No, through the chair. So when I say future debt, I'm talking debt incurred to pay for public infrastructure. So say we borrow X million dollars to help complete the bulkhead work on the river, and we need that revenue. We need future revenue from the TIF district to pay the principal and interest on those bonds. The TIF district, as the tool necessary to get that TIF revenue, has to remain in existence to be able to pay those bonds back.
Okay, so here's where I'm trying to go with this. If we pass this today, are we locked in and there's no way out? And if this thing is a complete catastrophe and we start losing money, there's no way that council can act in order to try to address or remedy the cause, is what I'm trying to get to. Do we need to have tools, or do we just need to repeal legislation? Would that be the natural course, or what are our tools if this thing goes south and does not perform the way that we expect it to?
To the chairman, it's hard to envision how it would go south to that degree. I think the measured approach we're taking to projecting future revenue, to assuming certain covenant ratios, coverage ratios in any debt that we would incur. The reality is, if we sell bonds or have bonds sold on our behalf, and we make a promise to investors that so long as a certain revenue stream exists, that they'll get repaid, we would be in a really tough position to eliminate that revenue stream through legislative act when it's producing. So I think there's going to be, we will have some contractual commitments that we will need to live up to, and undoing those, that revenue stream would present real challenges to the city reputationally and in terms of our contractual obligations going forward.
And Chief, we want to be, I understand that the market likes predictability and it likes certainty, and we like to have stability. I also understand that if these taxpayers start to see us bleeding dollars, and I have the utmost confidence that you guys are setting up a tool that you believe is fail-safe. But I think that's what everybody is trying to understand, is that if something does go wrong, then, you know, is this fail-proof? You're saying that it doesn't, there's no way that this can fail. Is that what you're telling me?
Through the chair, I guess I would need to understand what the concern is about failing. The district will be set up.
There's no way that we could lose money on this.
The district will be set up, and money will start coming into the district from the share of taxes that we have designated. We will then come back to you to borrow money based against those future streams.
Okay.
So there's no way that I can conceive of in which the city would be losing.
There's no risk,
money
no
here.
money that could potentially be lost.
I'd say
that's the question that
to
I'm
the
trying to understand.
to the chair, there is risk. There is risk that this totally bottoms out. I think it's a small risk, but we can't have it both ways. We cannot set this up, sell bonds, tell those bondholders we're going to pay you back from this revenue stream, and then decide we want to take it away.
And let me be clear, Chief. I'm not trying to say that. I'm just trying to set up something just to take it away. What I'm saying is that if this thing, unbeknownst to us, whether it's another, what is it called in 2008, oppression or depression or whatever else like that happens, or something happens that this trend starts to trend the other way, unbeknownst, whatever the market might cost or whatever, what tools do we have? Do we just repeal the legislation?
We
or
stop borrowing.
We just stop borrowing. Okay, that's what I'm trying to understand. So
we,
you're saying then the way to eliminate the risk is that we just don't enter into any risky borrowing deals if the district is not performing. Is that what you're telling me?
Yes.
Okay, that's what I'm trying to get to. What gives us the tools to not let us mortgage the city's future? That's what I think everybody's concerned about, making sure that we don't do anything to mortgage the city's future. One last question, and then I'll turn it over. Why did you guys, a lot of cities like Cincinnati did incentive districts. Why didn't you guys do like incentive districts as opposed to, you know, like, they did multiple districts and they didn't do just the one area, they did multiple districts and they did incentive districts. And then some of their districts performed well, others did not. So,
yep, to the chair. So as we assess the tools in the revised code, it was our assessment that this approach provided the city more flexibility than the incentive district structure. So we chose to propose to council the tool in the revised code that gave us maximum flexibility under the law.
okay. And why are we giving this to the port to bond instead of bonding ourselves? I thought we had our own bonding capacity. Why are we doing the third party, which is the port, even though we'll still be responsible for the debt that we issued?
Through the chair, so we would still be responsible. It does slightly de-risk any transaction for us. The debt would not be in our name. It would be in the name of the port. The port has a successful functioning debt program where they issue for, or on behalf of entities all over the county and the region. And so it's a way, again, to help protect the city modestly in this process by using a third-party issuer for any debt.
Okay, those are the questions that I had. I have McCormick, Santana, Polincic, Moore, House Jones, and Bishop.
Thank you, Mr. Chairman. Appreciate you holding this hearing today. And I want to recognize Councilman Hairston for a robust conversation in the DPS committee last week. I want to thank Mr. Schiller, as well as, I forget, his coworker who was here the week before, as well as Policy Matters Ohio, for their feedback today. Council President, as I've told you before, one of the reasons I'm a fan of you is you like to dig in and beat the issue up, good, bad, and get all the questions out on the table. prior to voting on it. So I really do appreciate you doing that. And as I said earlier, too, previously we got criticism for being a quote-unquote, rubber stamp, and sometimes now we get criticism for asking too many questions. So I appreciate this council that asks a lot of questions. So, Chair, I'm going to start by just framing this conversation from my perspective as I did last time. I thought it was telling to, as Mr. Schiller noted, Policy Matters Ohio kind of is an Ohio-based view of things, and the chief noted that, he's here representing the city of Cleveland. And Chair, to me, that illustrates the entire point here today. And I will say before I say what I'm about to say, I'm not suburbs versus city. It's America. You can live where you want. You can move where you want. You can live in Avon Lake or Cleveland Heights or Beechwood or Mentor, Ohio, or whatever. It's a free country. But at the end of the day, we at this table are here to represent the best interests of the city of Cleveland. And I also don't believe that those are exclusive. I think a strong urban core not only helps the city, but helps the entire region. So I believe in regionalism, I believe in regional cooperation, I believe in regional alignment. It's, I think, one of the reasons that a place like Columbus has grown, because for a longer time than we have, they've had regional alignment. With that said, Chair, today I'm really excited because I believe this is a step where we're prioritizing us being the folks in the city of Cleveland. For over 50 years, jobs have gone to Independence, to Mentor, to all other places throughout not only the region, the state, and the country. Who was crying out beside the people in the city of Cleveland? 500,000 people left the city of Cleveland. Where were the advocacy groups and think tanks crying out over the last 50 years? When our neighborhoods got divested in, when our populations plummeted by 500,000, when Medical Mutual moved to Brooklyn and left the city of Cleveland, I missed the outcry. I must have missed it. I know I heard it at this table. I know I heard it in our communities. When jobs left, when factories left, when companies left, that's what I care about. I care about the health and well-being of the city I was born and raised in, the city I serve, and I know the city that many people around this table, all of us around this table, live in, love, experience on a day-to-day basis. Mr. Chairman, I go to the grocery store in my neighborhood. Mr. Chairman, I walk in my neighborhoods many times a week. I deal with the crime, I deal with the good, the bad, and the ugly. I'm a minute late to this committee because I'm dealing with the shooting that happened in Ohio City. We deal with the good, the bad, and the ugly in this community. We live these neighborhoods. And so, to me, when I think about this piece of legislation, it is Cleveland saying, we are going to prioritize our jobs. We're going to prioritize our core. We're going to prioritize developing our city and fighting back against 50 years of what my council colleague here says, the sucking noise out of our city. We have to take a risk, implement tools, and fight back to ensure that growth is happening within the city limits of the city of Cleveland and does not continue to trickle out to suburbs around Cuyahoga County and the region. And Chair, I hear the passion out of my colleague, Councilman Conwell. You're not going to find somebody who's more passionate. Maybe my colleagues will argue he's extremely passionate about the well-being of his community, the city, levels of poverty, et cetera. I would argue that those conditions influenced heavily and regulated by systemic racism, but those conditions were put in place because of the outward migration of people out of the city of Cleveland, people in jobs out of the city of Cleveland, which left our neighborhoods with the challenges that we face today. So I really believe that regional movement has been incredibly problematic for the city of Cleveland, and today we've got to prioritize us. Just as the TIF districts that belong right outside of our borders do, the business incentive districts that cover entire cities 10 minutes outside of downtown Cleveland do as well. Other cities have gotten theirs. Other cities have put themselves first. So to me, Mr. Chairman, this is a tool for the city of Cleveland to start to fight back, not to take it sitting down. Mr. Chairman, this is a risk. There's no doubt about it. But what I believe is a fundamentally larger risk is us doing nothing. And I think that part of the reason that we have arrived in some of the challenges that we have today is because we haven't acted enough out of the status quo. We haven't taken enough of a risk in the past to fundamentally change the trajectory of the city of Cleveland. I believe that this is not the only tool by any means, but I think that this is a tool to take a risk to make a significant change in the city of Cleveland. Another thing I just want to note, Chair, and I'll ask our CFO here, this idea that, Chairman, to the CFO, we are diverting tax dollars away from the city of Cleveland or away from other critical resources by this legislation. Chair, to our chief, do you see outside of areas where intervention has happened? You've mentioned Euclid Avenue, you've mentioned Detroit Avenue. The reason property values went up there is because there was investment. There was intervention made. Outside of intervention, Chief, do you see a dramatic or even substantial increase in valuations happening without intervention?
Through the chairman to the councilman, no, and for a variety of reasons. One is the example that was on the screen earlier, but also there's a lot of talk about conversion of office to residential, which is great when it can happen, but it's important to keep in mind that residential real estate is less efficient from a tax perspective than office space. So the same building, 1 million square feet, as an office building might be valued at $50 million, as a residential building might be valued at $20 million. Exact same building. Now, residential comes with other benefits to the city and vibrancy tax basis, but from a property tax perspective, it is not at all a foregone conclusion that this district will continue to increase in valuation, particularly as we see declining office values and, where appropriate, conversion to residential, when even that residential will not make up the gap.
And again, I'm a very positive booster of the city of Cleveland, chair to the chief, but we still haven't seen the impact of lease rollovers in downtown and what that means for the city of Cleveland, which we all need to be paying very close attention to. So chair to the chief, it is your understanding, you're an attorney, you've been at the federal level, you've got a lot of outside counsel too, you're a bright guy, that this mystery money that we're fighting over, wherever it goes, this pot of money doesn't exist without intervention. Is that correct?
Through the chair, yes. I think what underlying the thinking from the mayor on down on the administration side is we have two choices, and they're very stark. One is we can continue fighting over a shrinking pot of resources and having to increase
race to the bottom,
levy after levy after levy, and tax ourselves to death without any growth. Or we can take some bets here, calculated, well thought out, take some risks, and try to invest our way into the future, grow the pie so that we can all benefit from a region that is growing from a population, from a business perspective, as opposed to what we've experienced over the last 50, 60 years.
Chair to the chief, and I'll move through this efficiently, the great poet LeBron James once said, "Nothing is given, everything is earned." And that's the way I look at Northeast Ohio. I'd love to be an area where, and listen, if we can get more immigration, and maybe with climate change, we'll have more natural in-migration to Northeast Ohio. But our history tells us that everything we have, we've had to fight for. Everything. We're not given anything in Northeast Ohio or the city of Cleveland. We don't have natural large influxes of people, natural large influxes of jobs just on its own, right? We have to fight for everything that we get. You noted, Chief, too, through the chair, that if jobs are created, if a hotel is built, things like that. The city of Cleveland, every year when we look at our budget book, we look at our bed tax that goes into our general fund that fixes the light on my dad's street in Ward 8, right? So that general fund is very positively impacted by, number one, income tax, so if we create new jobs. Number two, things like bed tax. So we can think about not only the property tax impact, but if you grow your economy, right, all those other levels of taxation can benefit the city's general fund, which pays for services across our neighborhoods. The other thing I'll note too, Chair, and this hasn't been discussed today, really, I mean, two of the major projects here are opening up our waterfront. And I've been very vocal about this, how we have all this public land or private land on our river and our lake that our residents, our citizens cannot get to. And a lot of it, our citizens pay to keep it up and to maintain it, and they can't get to it. A grandmother or a family that wants to take their kids fishing or to have a barbecue or to enjoy the waterfront can't get to it today because it's a parking lot or it is private property. So when we think about investing in public infrastructure, we're talking about, Chairman, to the Chief, opening up our most precious asset to our people in the city of Cleveland and the region to enjoy. And I'll note, too, Bedrock was brought up several times today. That's 13 acres of public waterfront property. Will there be private investment? Absolutely. But we are taking fenced-off land on our riverfront and opening up 13 acres of waterfront property to the public. So will the city work with Bedrock on that plan? As we should, to convert fenced-off property so our residents can have access to the riverfront. The other thing I'll note too, Mr. President, this idea that challenging the idea of whether public investment will benefit a private entity. Sure. Mr. Chairman, if you run a streetscape in any of our wards, does that help the little small businesses on that corridor? Yep. Will it help access from transport? Yep. Will it make their frontage look better? Absolutely. Will the cameras that we put in there help maintain higher levels of safety? Absolutely. So this idea that it's a bad thing if public infrastructure not only serves the primary purpose of serving the public, but also at the same time can help grow jobs in our economy, great. If that's the case, then so be it. So, Mr. President, again, we went over this a lot in DPS. We talked about how this is public infrastructure only. Mr. Chairman, this city council will have to authorize every penny, not only of the expenditure, but of the bonding. This is a remote TIF, Chair, so the dollars are able to be used outside of it. There will be no, and I would argue there'd be a positive impact on our revenue sources for city services because of what I described earlier. But the only thing left, Mr. Chairman, and then I promise I'm done, is I want one of the chiefs to talk about the federal funding here.
Yeah.
We're in a moment, Mr. Chairman, where there's the Biden administration, personal opinion, hopefully is there for more than the next year, but is here for the next year. There have been a tremendous amount of federal funding programs through the American Rescue Plan Act and through other acts. So, Chair to the Chief, I'll close by asking for an explanation on how can this legislation that City Council is considering leverage significant dollars from the federal government.
Chief.
Through the chair to the councilman, there are tremendous opportunities right now, as you noted, in the federal front. We've been talking to multiple departments in the federal government, particularly the U.S. Department of Transportation, which has a program called TIFIA, which is an advantaged loan program for transit and transit-oriented development, of which all of these public infrastructure improvements contemplated in Shore to Core to Shore district are. One of our peer cities, Kansas City, received a loan commitment from the federal government of $17 billion through the TIFIA program. We were in Washington, D.C. Several months ago meeting with leadership and the DOT and sharing the vision. They were excited about it, felt like this was a great fit, acknowledged that the presence of a TIF district is a tool to secure the repayment, and this federal loan is another way to go rather than bonding. To monetize the TIF district. We are actively working on a letter of interest, which we anticipate submitting in April, should the TIF district pass council, to try to move forward on capturing those opportunities. And we think there is a window right now between now and November, which is presents our maximum opportunity, both through the Department of Transportation for loans and grants, as well as Commerce, EPA, other departments that we've been actively engaged with.
Thank you, Mr. Chairman. Again, other cities in Ohio, including Columbus and Cincinnati, cities in Northeast Ohio have used this tool, as well as other tools. It's time the city of Cleveland punches back.
Thank you so much, Councilman, and I agree. I think this is a very unique and innovative tool. Let's go to, if I could, Councilman Harrison, if everybody can indulge me for a minute. He does have another engagement, and I know that he spent a lot of time with this, and I want to hear his point of view if I could. Thank you.
Sure. Thank you, Mr. President. I won't be long. I think I said enough last week at our DPS committee meeting. I know that some of the folks in the room were also part of that. How many hours? 3 or 4 hours? 3 or 4 hours? Okay,
yeah.
that was good.
With a break.
Yeah, with the break, with a small 30-minute break in there. But nonetheless, you know, this discussion here today is good for us to have, so that way folks have a clear understanding about what is being proposed. I fully support this request to create this shore to core to shore TIF. I always add another shore in there for some reason. I really believe that this will help us and put us on a path to realize and unlock a lot of potential that we have on both our riverfront and our lakefront and throughout our downtown. As I said last week, the previous administration put us on a good path, but I think that we can go beyond the good work that has and the foundation that has been laid for us by the previous administration, that this has the opportunity to really propel us at a much faster rate as it relates to our growth, not only for downtown, but the city of Cleveland. That is one of the reasons why this body wanted to ensure that neighborhoods would benefit from the work that we intend to do here with this TIF district. I know folks were concerned about the percentage. Oh, you shouldn't say a percentage, you shouldn't say this. Well, I think it was a good thing to talk about a percentage of neighborhoods, so that way residents can understand what the impact for them would be, what impact this will have on their community. Because oftentimes we are asked, well, what about the neighborhoods? You know, will the community benefit? Well, now we've made sure that the community will benefit, other than a Parks and Recs, plan or payment for Parks and Recs master plan that has been talked about before. You know, I see a lot of good out of this TIF district that we are looking to create. This will not just be for downtown. This actually will have some good effects on our neighborhoods, which I think should be noted. You know, we spent a lot of time having conversations with Squire folks. We've had conversations with some potential developers, right, along the riverfront and lakefront. And every single one of those conversations, this body has made sure that we had neighborhoods. We talked about neighborhoods as part of the conversation. So I just want to make that comment because some folks have reached out and has asked about, well, how does the neighborhoods benefit and where do they come in? I want to make that comment that we are not leaving neighborhoods behind when we create this TIF. This is not exclusively for downtown. However, we need the greatness of our downtown to help us generate some dollars to help put out into our neighborhood. So, that's very important for us to understand. One of the things that came up, well, how do we know that this is actually going to happen? Well, if I'm going to bet on somebody, I'm going to look at, their history. I'm going to look at what they've done in the past. And if I have Detroit to look at downtown Detroit about what I believe an organization is going to do or the work they've done here already, then sign me up. Sign me up, because I really believe that our city, our downtown, our community will see a lot of the same growth that Detroit has seen. A lot of the same growth that Detroit has seen. And we're in a much better position than Detroit was when they began to see the growth in their city. So I think that the best indicator is history. And the history that this organization has shown us in another city, another state, and also the history they've shown us even here locally, is a great indicator of how we expect things to go. And I know there's concern about proceeds being diverted. The response, as I heard from Councilman McCormick and administration as well, a percent of zero is what? Zero. We have to start somewhere. We cannot continue to manage decline. We have to look at how do we grow our city. And this is one of the greatest tools that we can have to grow our city. We wonder why Cincinnati, and even Columbus, and even Cincinnati is ahead of Cleveland. because they've done things like this. They've taken risk. They haven't continued to just do the things that are the most safe, right? And as we heard, if we believe that it's not going in the right direction, then we just don't continue to bond. We don't continue to go out and issue debt. That we stop, right? But I am 100% confident in the folks who we are going to partner with to ensure that we see to work to ensure the growth of our community by starting with the TIF district here. So just my comments I wanted to add. Fully support, Mr. Chair. You know, we've done a lot of work around this, And to any member of this Finance Committee, make no mistake that, you know, we've asked every question that we can ask, right? Trust me. And that's why we've added to the ordinance from last week to require any TIF proceeds, including issuance of debt, will come back to this body for our approval. So doing this today really does nothing. Right. They can't, I mean, yeah, the district will exist, but you have to come back to this body to monetize the TIF. The TIF means nothing unless you monetize it, right? It has no value without you monetizing the TIF. So I wanted to make those comments to ensure that we all understand where we are. And anybody on this committee or this body know me. You know, I'm going to ask the questions. How is council going to be involved? How are we going to protect the general fund? To make sure that we are not putting ourselves on a hook for something that we cannot pay for down the line. And so I'm fine with the answers that we've received. Even the folks that you mentioned, and I know I'm probably over my time, Mr. Chair, but even the last conversation we had with the folks who came through by way of GCB, you know, they were honest about the potential risk or the concerns, and they understood exactly. You know, at first I thought I was walking into a meeting for them just to tell me how good this was and just share me, there's no risk, you should be okay, just do it. Well, it was the opposite. They actually listened. They actually, you know, shared some feedback and thoughts about, you know, the potentials of this, you know, some of which, you know, was shared here and discussed today. So, you know, again, Mr. Chair, you know, fully supportive, ask the committee for support. We will be back here to, you know, authorize any issues of debt, any use of the TIF proceeds as we move forward in this process. So I'll leave it there. Thank you.
I'm going to, thank you so much, first of all, Councilman, and you're right. We have, I can't remember asking so many questions around this. I mean, I've been like, I'm one of those type of people, if it's too good to be true, it must be something wrong. And I've literally asked that at best 10 different people, and everybody said, hey, Blaine, this is actually a risk worth taking, okay? So just want to let everybody know that. I'm going to ask, because I am in the process of losing a couple of committee members for various reasons, I'm going to ask if we could call the roll if the Finance Committee does not mind. Once again, this still has to go to the full floor tonight. So if there's something that you are protesting against or feel like you can't support, then you have a chance to vote against it tonight. But I'm going to ask because I want to make sure that I keep the Finance Committee intact while we got them, because a couple of people have said that they have to go due to some family business. So does anybody have any objections to me calling the roll?
I did have some questions, but
We still going to keep the administration here.
okay. Before you call that roll, I want to,
Go ahead. Go ahead.
I want to offer an amendment.
Okay, before that. Okay, go ahead, Councilman.
I'm going to offer the Polensek amendment that every 6 months, they will report back to the council as to the amount of funds they have collected and the amount of funds as it pertains to a specific property that they have collected it from.
Absolutely.
Every 6 months, they must do that, so we have an understanding, Mr. Chairman, as to what the revenue collections are from the TIF district.
Chief, do you have a comment?
Yeah, through the chair, we receive a lump sum payment from the county, not by parcel. So it'll just go into the TIF district fund, the payments, which are generally made twice a year.
And can you report that to us?
Yeah, we can put that aggregate amount, just not by parcel.
So, Mr. Chairman, based on, so from 200 public sewer, you cannot tell us what the revenue amount that we'll be receiving from that?
Not in what we receive from the county. That would require a whole host of other research and work to develop that. We receive our property tax payments twice a year generally from the county, and it's a lump sum amount. This would be diverted. The amount for the TIF district would go into the TIF fund. Then the amount that goes to the general fund goes to the general fund. We don't account on a property basis.
Okay, well then, Mr. Chairman, I would just say this. At some point through the discussion with our research staff and the administration, I think there's been some legitimate issues raised, and we need to identify at some point, and I'm not going to belabor the point, but I will make the motion for every 6 months to get the report back
I'm about to now.
as it pertains to the revenue that we are collecting from the TIF district. And then at some point, Mr. Chairman, working with the administration, I think it's important because, Mr. Chairman, as the director indicated earlier, because I was going to raise this as part of my questions, he pointed to 200 Public Square, and that's a classic case where the appraised value or the purchase price years ago decreased substantially. And I understand through Board of Revision, the Cuyahoga County Board of Revision, there are a whole host of property owners that have filed for appeals to reduce their property taxes. So that will impact our revenue stream. And so I think we need to track the Board of Revision. The city needs to track Board of Revision. I don't know if council can do that, but the fact of the matter is, we need to understand, because the dollar amounts that are being projected here might not be the reality at the end of the day. Okay?
Chief, what can we make sure that we get? Because I want to make sure that Councilman Pulisic is right. We want to make sure for the voters, transparency, and how do we make sure that we have that transparency clause in? Councilman, you might need to reiterate, or did you have any suggestions to reiterate what his amendment may be? So did you have any?
Well, the amendment is that every 6 months they report back to us as it pertains to the revenue collected from the TIF. And then however else we can drill down, and I'll let the attorney figure that, how we can get a better understanding as it pertains to revenue projections.
So before we finalize because I also have an amendment as well.
Yes.
So before we finalize the amendment, Chief, did you have a comment?
Just to the chairman, reporting aggregate fund levels, revenues in, revenues out, that's not a problem.
Okay, so, Mr. Roberts, do you have the amendment that Councilman Pulisic has just proffered?
Councilman Pulisic to specify the exact language.
Within every 6 months, the administration must report to City Council as it pertains to funds collected within the TIF district. Got it?
All right, so amendment has been put on the floor. Do we have a second?
Second, Mr. Chairman.
You're not part of the finance.
I'll second that, Mr.
So the
Chairman.
second is Councilman Bishop. All in favor, say aye.
Aye.
Oh, I mean, any discussion? Councilman?
Here's a discussion on it. Number one, the chair, Councilman Mike Pulisic.
Yes.
They don't bring us back progress reviews. We request for it, but we don't. And we don't bring it back. When we ask you for things in committee meetings, they always say yes, always. You know they do, right? Their culture is not to bring it back anyway. So we don't see it within 6 months. Number two, my other discussion is this, that I don't just want to see the revenues, I want to see the gains and losses. How much did we gain, or did we lose any money, so we can see trends that's going in that direction? You see what I'm saying?
Yes.
Yeah, that's what I want to see for losses. That's why.
All right, so Councilman Harrison has to go, and I apologize because he really does have to go. But we do have an amendment on the floor. Councilman put the discussion matter. All in favor, say aye.
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 Any opposed? The ayes have it. Okay, I do have one more amendment, if we could, if I can get my sheet back. This is a real small amendment. This is basically backing up what Councilman Harrison just said, and this is the community, that all of these requirements will come back for community benefits agreements. And Success requires funding, project can district grant.
And-
Basically, all we want to do is basically say what we already know, is that this is going to come back in front of council for a community benefit agreement.
Through the chair, typically when the city is doing a project and we're building our own infrastructure, we don't enter into a community benefit agreement with ourselves.
Also, because this is
This is public.
private, if we were bonding it with somebody else, it would be different.
If it's
But since it's our own project, we're not subject. You're right. I forgot about that. You're
Yeah.
right about that. Thank you. All right. So once again, I'm going to call the question on as amended, ordinance number 38-2024 as amended by council members Hairston and Griffin by departmental request. And I'm going to have Inez, if she could, call the roll.
But we still have a right to ask questions. Okay,
Yes,
okay,
yes,
okay,
we're
go
still
ahead.
going to ask
Go ahead.
questions after
Good.
this. Because I still have other
Yeah.
committee
Yeah.
members that have not had a chance to ask questions. Yes. Yes.
Yes.
Yes.
Yes.
All right, thank you. So 38-2024 as amended stands approved. Now we will continue with the questions, and I have up Councilwoman Jasmine Santana, Councilman Michael Polensek, Councilwoman Rebecca Moore, Councilwoman Stephanie House-Jones, Councilman Bishop.
Thank you, Mr. Chair. I will be very brief. So I was part of the robust discussion that was held at DPS, so I understand the legislation is only to set up a tool. But something that I'm grappling with, and I've talked about this from day one, is the impact in surrounding communities. The market, the increase in property value is great, but when you talk about Detroit Shoreway, I am a product of displacement because banks were not lending to low-income families, especially Latinos at that time. So we were displaced from that area. Market value went up, which is a great thing, but also taxes, right? And then rents started increasing. So my question, very straightforward, is have we examined the impact of TIF in vulnerable communities in other cities? Through the chair.
To the chief.
Through the chair to the councilman, we have not. We spoke extensively with Columbus and Cincinnati about the TIF districts that they've put in place and how those have leveraged additional development. We did not have explicit conversations with them about displacement. But I think to the conversation we've had at the table on many occasions, I think this is where we need to work proactively in planning for success and thinking about all the other policy tools that we can put on the table to ensure that we don't see displacement and that residents can continue to benefit from the growth that we have in the city. But without growth, we've got a whole different other set of problems that we have been dealing with across our neighborhoods.
Thank you, Chief. And through the chair to Chief, just along those lines, will you be working on policy in alignment to our next legislation that we will talk about bonds and set up the structure of how TIFs are going to run? I'm grappling with voting for this and then not having any process in place. And then down the line, maybe when I'm not here, my neighborhood or our surrounding neighborhoods are being impacted, right? Like I care about our vulnerable families being impacted. Development is great, and City of Cleveland has to grow, but it has to grow with the residents that have been here and have been patiently waiting for this growth. So, through the chair to the chief, is that something that's already part of the process before our next legislation and talking about, and maybe it's talking to the county, like what processes are they going to put in place where I'm already seeing a lot of tax foreclosures in our neighborhood, so I'm not sure if there's been discussion around that, but that is, I guess, my struggle with this legislation. And I know that everything, you just can't perceive that, right? But I would rather be safe than sorry down the line.
Yeah, through the chair to the councilwoman, I think to answer your explicit question, I don't think there's anything specific tied to this legislation that we'll be coming back with when we issue bonds. I think as we've outlined, that this TIF district is focused on public infrastructure investments downtown. There's almost no single-family housing implicated in that. We do fully expect that whenever development projects are coming and are seeking city incentive, we will have community benefits conversations around affordability. We have been taking a number of other steps, including Residents First, citywide home repair efforts, the property condition survey, and better tracking of foreclosures across the city. And I think that's part of the broader policy effort around how do we address and start to think proactively, about displacement in neighborhoods, as well as ongoing conversations with banks and lending about lending in neighborhoods, evaluation of alternative affordable housing typologies across our neighborhoods. There's a variety of other parallel conversations, and as I outlined, when I started today, I think, this is one policy tool amongst many policy tools to address all of the issues, including affordability.
Okay, thank you, Chief, thank you.
Thank you. I have Councilman Michael Polinsik and then
Thank you.
Councilwoman Rebecca Mora.
Thank you, Mr. Chairman, my honorable colleagues, and I appreciate the discussion and the discussion that took place in Councilman Harrison's committee. I'm the only one at this table that was here for the debate on the Brown Stadium, Gateway, now it's called Rocket Field Mortgage House. I was here for all those debates. And what I want to say, it goes back to some of the issues and concerns that were raised by Policy Matters. Now, with the action we just took sets up the geographical area. You have to come back to us on all the requests for infrastructure improvements and projects. But let me just say this, and do we have to take chances? Of course we do. All of us, every member of this body takes chances every day supporting different things in their neighborhoods. But this is what you need to hear again, is that I was here when I was told, and I was cleaning out some stuff, and I found it, but I forgot to bring it in today, where they promised us the 28,000 jobs with Gateway. I got it, got the sheet. 28,000 jobs would happen with Gateway. If we had 2,800 jobs created with Gateway, it'd be a miracle. Nowhere near that. The promises on the Indians, then Indians Stadium, now Guardians Field, the promises made on Brown Stadium with regards to Cleveland residents, minority contractors, minority opportunities, all the stuff. I heard it all. I've got the files. The overwhelming majority of it was never achieved, and what we wound up with was the highest poverty rate in the country, and then 1 or 2 in childhood poverty. And now we're about to lose 2 wards as a result of population loss because of the migration out of the city for all the historic reasons, specifically quality of life. So to the administration, you've got to understand when you come to us, you're going to have to do a much better job of pinning down numbers. It just can't be, what was it, 43,000 jobs? There are 48,000 jobs. I believe in that like I believe in the Easter Bunny, because we're approaching Easter. Ain't going to happen. It's never going to happen. And this is over a 30-year period. I have a hard time looking beyond a year, 2 years here in my time here. When I think of 30 years projections, I never thought I'd be here for 4 decades. So I can't even conceive the members of this body looking as it pertains to development for 30 years. It's like telling me we're going to get to Mars next week. It ain't going to happen. So you've got to come in when you come in with your projects. You've got to come in with real numbers, because the issues that Policy Matters raised are legitimate issues. Because we're going to go through a lengthy and heated discussion at this table as it pertains to the reality of what you're proposing to do. And so what I need to get clarified is this. The bedrock proposal is going to be carved out of the shore core, correct? Because the shore core takes in the bedrock area, correct? Someone tell me that?
Through the chair to the councilman, a portion of it is not included right now, but to the extent that we enact 0.41 TIFs on that, it would come out.
Okay, so that's the 4-1. What we did today is the 4-0.
Correct.
Correct. So I'm looking at the big picture, and I'm looking at the blue properties on your map here. You go back on the PowerPoint. Some of the biggest properties and some of the biggest developments are already outside of the TIF. They've got their own separate TIFs, their own separate financing. So when Policy Matters says 18% of the total property taxation for the city revenue comes out of this new proposed TIF area, and now all the blue area is already eliminated, I question again the revenue stream. I really do. And I'm not trying to, say that you cook the books, but I'm saying that I don't believe in the numbers. I don't believe the numbers, okay? Based on my historical experience here, every time I've heard numbers and presentations, it's never lived up to what I've been told at this table over the years. So you're really going to have to, I would tell you to be, when you come back to us, extremely conservative in your projections. I mean, I'm talking tight-wide projections, okay? Because to come in and tell me that you're going to raise $7 billion over the course of the 30 years, I don't believe it. I don't believe it. So I'm looking, Mr. Chairman, I'm looking for reasonable expectations and numbers. The other side of the question that I have is the does the council, when a property is removed from the TIF district, let's say 200, I don't even know if 200 is in the TIF district. Let's just say for the sake of discussion. I can't remember the financing game on that thing. Let's say 200 Public Square, you're proposing to be taken out of the TIF district. Do we vote on that?
Yes.
So that must come back before us.
Yes.
For that vote at an individual removal.
Yes.
And at that time, you're going to be able, hopefully, to be explained to us the implications, and then on the entire TIF district, the financial implications. So all I can say is that, you guys weren't here, so, the things that were said at this table have no bearing on you two gentlemen. You didn't make the promises. You didn't mislead anybody. You didn't cook the books. But I can tell you one of the biggest business person in this town ever that I got to know over the years. That's not to say I always agreed with him. We would argue quite frequently. But when I confronted him one day in his offices, because he was a leading advocate for Gateway, and I said to him, I'm not going to mention his name because he's deceased. I'm going to say, what about the 28,000 jobs? Where are they? Where are all the benefits to Cleveland residents and minority businesses and MBE and all this stuff? And he leaned back in his chair and he said, what do you think we had to do to get it passed? This is what we had to do to get it passed. If I couldn't sit there at the table and tell you the truth, because you wouldn't have voted for the damn thing. That's just what he told me. You wouldn't have voted for the damn thing. So this is what we had to say to get it passed. And maybe by talking like I did, you know who I'm talking about. Anyway, okay. But the fact of the matter is, I'm not buying it no more. I'm not buying the boogeyman stuff. I'm not buying all the stuff because the numbers that every one of us are dealing with, the poverty, despair, the lack of investment, the disinvestment in our community, is a result of promises not being kept and not being made adequately. And I'm not buying it no more. And as long as I breathe air, I didn't vote for that crap. I want to make that clear to the viewing public. I didn't vote for none of that crap. Thank goodness. And I wish I could say here that I was wrong in my vote against it. But there were 9 of us that voted against a lot of that stuff, including the former mayor of the city of Cleveland. Okay, including the last former mayor of the city of Cleveland. So all I'm saying to the Bibb administration, you two fine gentlemen, be upfront and honest with us. No boogeyman stuff, no wild stuff, no voodoo stuff. Give us the right numbers and then let this body decide. There's enough intelligence around this table, at least I think there is, that will make the right decision based on the right numbers and information. Thank you, Mr. Chair.
Thank you. Any response?
Through the councilman, through the chair to the councilman, a couple things. First of all, thanks for the comments. I understand and agree with the frustration. One specific technical point on the blue on here, a number of those blue existing TIFs are TIFs that were extended at the end of last year, and so they are counted in the TIF district because those kick in 12 to 15 years, including that big chunk at Lower Euclid. Which is a big piece of it. I think on the matter of projections, we obviously do a lot of this work in economic development, and it's not a science. And the further out you get from when the projection is made, the less accurate it's going to be. So when we come with a project where we have an employer and they say, I'm going to hire 120 jobs next year, I usually feel pretty good about those 120 jobs. Okay. When we're putting projections off a master plan with square footage for development that probably won't be built exactly this way, and we're looking out 10 or 15 or 20 years, it's you're putting the best information you have today to a model. And you have to acknowledge that it may or not be. I think the closest to today is the most accurate it's going to be. So I think as we look at the model and say, okay, if we assume 3.5% growth next year on what the district is going to generate, that's the number I feel best about all of the numbers that we're projecting here. So we're going to do our best to be honest about where the numbers have come from and what the margin for error, but it's future prognostication that we're going to do based on the best methodologies that we can find today, and that's what I think we'll commit to bringing.
Thank you.
Thank you, Councilman. Councilwoman Rebecca Mora, and then Councilwoman House Jones, then Bishop.
Thank you. I also want to applaud Chairman. I do truly feel like for a large piece of legislation, this has gone through really significant vetting. Even though I'm way far at the end of the table, I feel like I've been separated from you all. I have 4 sets of questions I want to go through just so that I can best understand, a complicated piece of legislation that I think will have major impacts on the city in the future. The first set of questions is just about where the money can be spent. We've talked a lot about how this TIF is focused on it is obviously just for public investments, but am I correct in understanding that there's a possibility that some of these public investments could be on land that would later be sold to private developers through the chair to the administration? Is that accurate, or is it fully public rights of way that will stay public rights of way?
Through the chair to the councilwoman, I think it may be theoretically the case that a parcel that is improved with public infrastructure, say utilities.
Yeah, that's what I'm thinking of.
Think lakefront, right, where there's very little utility infrastructure up north of City Hall, and as part of this work, we could see that happen. And then as part of the master plan for the lakefront, there are it's the majority public park space, but there are some development parcels that have been carved out in the plan that could be not sold because of the nature of that land, but effectively sold to a developer to build something vertical there. So yes, in that case, there could be the ultimate use of a piece of property that's improved with these funds could ultimately be used by a private entity. But the vast majority of what we have in mind is in our planning is, what you would think of as typical public infrastructure, open space, roadway improvements, things of that nature.
Through the chair to the councilwoman, the flip of that is that there could be areas where there is private land right now that is going to be improved with public infrastructure and dedicated to the public. So if we think about the Bedrock master plan area, much of that 12 acres that will be public park is privately owned today.
Yeah. And I think about this because for instance, like the Intel plant, there's a substantial amount of TIF money being put into the streets and the utilities that go into the area around that will ultimately be owned by Intel. And so it doesn't seem that crazy to ask, but it's great to hear that your anticipation is that to the extent we're doing public investments, it is on parcels that will maintain in the public interest. Through the chair. All right, great. I'm seeing yeses. Okay, great. Additionally, on that first point, something that I hadn't appreciated until the thorough answers, which I truly appreciate from the administration, is that to the extent we're spending money outside of the TIF district, that's because of a narrow window that has been opened by the State House. And it's not typical that TIF districts allow for significant spending outside of the TIF districts. Is that correct, through the chair?
Not through the chair, not in the case of this district. So last year, the council authorized the extension of certain TIFs and designating them as remote. That was a limited window of time where we could do that. For new TIFs that are being created, there is a window during the life of that TIF, of any TIF, that it can be. For extension. Oh, that's for extension. I'm sorry. Yeah, I'm sorry, for remote. I'm sorry, I got crossed. Yes, for remote, there is a window, and it's closing soon.
Okay, so just to be clear, it is accurate that this is available to be spent outside of the TIF district because we're taking advantage of a window provided by the state.
Yes, apologies.
Oh, okay, great. Well, it's good to know it's complicated for everybody. And I just want to, I think you've answered this in the written questions, just want to answer it for the public. Your understanding is that there are not risks associated with utilizing that window. For instance, it couldn't be retroactively revoked by the state in a way that could negatively impact our ability to spend this money in neighborhoods. Through the chair.
Through the chair, that's correct.
Great, thank you. All right, my second area of questions is something we've just been going over and over and over around, which is downside risk. I only will stop here briefly. We're just making a short stop on a way station to just make very, very clear that in the type of circumstance that the council president laid out, where fundamentally the revenues coming in are lower than the expenses that we owe on the bonding that will ultimately happen, what is the anticipated consequence at that moment? Is it that we default on the bonds? Is it that we have to pay the bonds out of general fund? Like, what happens in that moment? What is the risk? Through the chair.
Through the chair, I'm going to give an honest and sort of as thoughtful of an answer as possible that I think is going to be dissatisfying.
Okay, great. I love it.
It depends on what the terms of any specific bond issue are and what covenants and promises we've made to the purchasers of those bonds. So let's just sort of level set. In a transaction that is supported by a specific revenue stream and nothing other than that revenue stream. It could be TIF revenue, it could be some other source of revenue that is not general obligation. Think it's typical in project financing. This exists in the corporate sector too, where you have a single purpose vehicle that's created to finance a particular project. And when investors purchase the debt of that entity, they're doing so with the acknowledged risk that entity might not pan out.
Yeah.
And so if it's set up correctly, if that entity doesn't pan out, if the revenues don't come to fruition, it's not a default. because everyone agreed up front, you get repaid, we get repaid if there's revenue. If there's not revenue, we're taking that risk, and we're pricing that into our transaction.
And so, to be clear, when we anticipate the bonding that might come out of it, we're not anticipating backing that bonds by, for instance, the city general fund.
Correct. Yeah. So I think if you think about it, there's a continuum of steps we can take. We can provide as much certainty as is possible that investors will be repaid, and generate more upfront proceeds, get a lower interest rate, generate more cash up front.
Yep.
We can say we're not interested in taking on that risk as a city. We're pledging to you the revenue streams that we anticipate from this TIF and nothing more. Then that means we will get less revenue, but there's less exposure to the city.
Yep.
And there are many different places in that continuum where we can land, but those are essentially the poles.
Yep. Okay, great. So essentially, you know, as with any bonding transaction, somebody who holds the note is taking on some level of risk. And you're saying, you know, that's built into the transaction. That's the nature of the transaction. So why this answer feels unsatisfying is that we don't quite know where that risk will pan out, but we feel very comfortable, and you feel comfortable that you can meet the obligations of the bonding based on the numbers that you have, and obviously there's more to come on that. And secondarily, and this is the point I want to elicit, that we are not going to be backing those bonds with standard general fund dollars. We're not kind of creating a siphon where we have to pay out this bond if the tax revenues do not meet what's expected.
Yeah, through the chair. So, to the point Jeff made earlier, this, and I know these concepts are connected, but this ordinance doesn't touch any of this, right?
Yeah.
And, you know, we are certainly approaching this work with the expectation that we're not going to offer the general fund up in any way to support this debt.
Great.
There's going to be a full and robust conversation when it comes to the point in time where we do want to incur some debt with this council and the administration to make the policy choice at that moment in time of exactly how do we want to do this, right? When we have more concrete feedback from the bond markets, we know what is that future revenue worth today in terms of cash that we can use to pay for these projects. Is that enough? How do we want to approach making a deal less risky, or not even less risky, but apportioning risk in different ways to maybe increase the amount of money that can be produced? You know, for example, there's a product called bond insurance that one can buy, and it will cover principal and interest payments in the event that the revenue stream is not sufficient. That costs money. So that might increase costs, but that cost could be worth it because it could increase the amount of money that an investor is willing to part with, because the investor will feel more secure in the investment that it's making.
Fun fact, I spent my first year out of law school representing AMBAC, one of the largest one of those bond reinsurers, because they had many claims for the results of the foreclosure crisis here in Cleveland because they were sold a bill of goods. So they actually ended up being the one who could prosecute folks like Countrywide. So plenty of good time you just brought back to me in a big wave.
You're welcome.
All right, so we're moving on from this way station. I really appreciate the clarity. Point number 3, I hadn't really dialed in about this idea of the IMPLAN report. And am I correct in understanding that this is the document from Bedrock that cites 48,000 jobs and something like $400 million in public infrastructure for the overall Bedrock plan through the chair?
Through the chair, there are 2 in-plan reports, both of which are draft. One that models the master plan on the lakefront and development that will come from that, and one that models Bedrock.
Okay, and what is IMPLAN
It's a software tool.
It's a software
that is used by
tool.
economic development professionals for this kind of economic impact modeling. You plug in, square footages, local assumptions on tax rates, et cetera, and it will spit out potential economic impact numbers.
Got it. So there's 2 IMPLAN reports, and just repeating back to you what you said. One is covering the actual Bedrock riverfront, and then a second one is for the overall TIF district. Is that correct through the chair? And who produced both of those reports through the chair?
Through the chair, the lakefront one is being done through a sub-consultant to Osborne under our North Coast Connector contract, and Bedrock produced the one for theirs.
Okay.
Through a consultant. I don't seem to recall the consultant off the top of my head.
Got it. And the 48,000 jobs number, which report does that one come from? Through the
Both.
chair? It comes out of both.
Combined.
Okay, so that means they're using the same underlying assumptions for both of their.
Well, it's the 48,000 is a combined job creation from the lakefront estimate. And
They're not independently reaching the number 48,000.
Correct.
One report has one number, one report has
Correct.
the other, and the
Correct.
sum. And so, to the chair, have those documents been provided to council?
through the chair, they haven't. They're still in draft format.
Okay, and have you reviewed them through the chair?
I've reviewed in detail the lakefront one. It's still going through some change.
Okay. But you feel confident in this number that's been produced, the 48,000 jobs?
Through the chair, I haven't spent enough time with the reports or the assumptions on that. It's one of the reasons we didn't highlight that number in this round of council presentations.
Okay. Obviously, I think probably your sense is this is setting, as we heard, this is setting up the tools. It's not setting up the bonding, so we don't need to have the, this very detailed in-plan assessment at this stage. But I'm sure I have your commitment that we'll be going through those in detail in advance of any bonding procedure through the chair.
Through the chair, yeah, we anticipate to get those finalized, and I would say we would certainly look at those if we were planning to allocate bonds towards public infrastructure that we believe would benefit a specific development project.
Okay. All right, great. We're chugging along. Last point I want to make, and I think actually probably the most important point that I want to make, is talking about the idea of, as we talk about those 48,000 jobs, it's clear to me that some of those are temporary but important construction, building trades, built environment jobs, and that some of them will be permanent. Some of them we hope will be the type of family-sustaining, high-quality jobs that we have wanted to bring to Cleveland for a long time. And I had an interesting conversation this weekend. SEIU Local 1 had a fantastic rally for members across their local. And when I was talking with the woman who runs the local and sort of said, what are you hoping to get out of Monday? What are you hoping to get out of the Court Shore? And she made the point, look, we need to have a commitment on the table that those permanent jobs are at family-sustaining wages. And I kind of said back to her what I think you would say, which is, well, this is setting up the tool and the framework, so we're not, this is for public dollars, so we're not actually putting money into a private vertical building where we can ensure that there are family-sustaining jobs. And I think the thing that will stick with me for a long time is she kind of laughed, and she said, Rebecca, they keep telling us we're too late to the table. And all of a sudden, we start asking questions, and we're too early to the table. When is the right time for us to get these commitments? And she said, look, when Sherwin-Williams happened, they told us the ink is dry. The ink is dry by the time it was ready to talk about the custodians union and who was the building maintenance and who was cleaning the building. And now that we're looking ahead to this public investment, all of a sudden it's too early, and the members of my union can just never win. And that really stuck with me. And I understand that the logistics of what is before us today does not include the type of vertical development where we can make clear legislated commitments to family-sustaining wages for the people who work inside those buildings and maintain them long past the time that hopefully the well-paid union labor that builds them is out the door. But I would love to just hear from the administration and your commitment to making sure that as we pump money into downtown, as we move towards creating an environment where vertical construction is possible, that you guys have in mind a commitment for this type of family-sustaining wages. Through the chair.
Through the chair, thanks for the question. And my colleague Austin Davis, I think, was at the same event this weekend, and
Yeah.
we talked a little bit. We were going to reach out and set up a meeting with the SEIU leadership to kind of help figure out when the right time to be at the table is. I think this administration has shown time and again our commitment to union labor, to family-sustaining jobs. And I think, with respect to the TIF district, I think the place for having those type of discussions and commitments is going to be around the community benefits agreements for particular projects. We've already started to have that conversation with Bedrock and specifically with respect to this point and their projects, and would welcome the engagement with SAU in terms of making sure that we can find a way to drive as many of those commitments to quality jobs.
Yeah, absolutely. And I'll round that out by saying that to the extent, Bedrock is listening, I want to make sure that their deal includes this type of provision. And I realize that can't happen today, but I know I speak for myself and others around the city when I say that as we move money into this project, we want to make sure that those permanent family-sustaining jobs are at the table. So thank you.
Very good questions, Councilwoman. Appreciate it. And glad that you asked the SEIU question. I couldn't be at the event this Saturday, and I'm glad that you had a chance to ask that question. Next up is Councilwoman House Jones, and then Councilman Bishop left. Okay.
Yes, thank you, through the chair, to the team here. Good afternoon. So I had it's just I would say a basic question. So as we talked about how these resources have been utilized, specifically, namely, people are talking about Columbus and Cincinnati. My request had been to share what that actually meant. So that request went out like a month ago of what have been the current community benefits to Columbus and Cincinnati, and really just drilling down what those things are, right? So as Councilman Polensek shared about prior deals, we get the lay, kind of this overview of you're going to get this many jobs, these are going to be invested, and so specifically, I just really want to see from the other communities that have utilized this tool thus far. I think one, maybe 20 years into it, so not a lot. I don't know where it stands as far as the amount of money that has been generated and then what has been put into public infrastructure. But if there have been funds put into that public infrastructure, what have they been? And what benefit has the community received in terms of physical development? And then when you look at the, I would say the social benefit and economic benefit when you look at, specifically looking at Black-owned companies, women-owned companies participating in the actual infrastructure, and then the long-term social community benefits that occur within a community.
Through the chair to the councilwoman, appreciate the question, and I also am going to give you an unsatisfying answer, which is we've spoken with both Cincinnati and Columbus in response to your specific question, and they were unable to produce much, if anything, in terms of community impacts beyond dollars invested and jobs created. And so I think that's one of the reasons when I mentioned during my presentation, we are going to work very carefully in our community benefits agreements that for projects that come out of the TIF district, as well as through the dollars that are spent on public infrastructure, to do a much more robust job of defining metrics that we want to track and impacts that we want to track, as well as structuring explicit community benefits up front, as we're starting to do now with Bedrock.
Through the chair to the chief, thank you for that. And so this is one of the things where individuals are like, it's an example, I'll tell you that. So even just in Ward 7, right, you will hear about the hundreds of $millions that have been invested in Ward 7. And then you drive Ward 7, and it's like a benefit for who? Who got it? Who's benefiting from it? Yeah, there's a lot of money being spent, but it's not actually connecting to the people that are there who've been in the community for generations. And that for me is just, it's not set, it just doesn't set right with my spirit. And so a question that I think is basic, if we are saying we are utilizing a tool that has proved to be successful in other communities, we should have real documentation and evidence that it is producing that type of results specifically for community members. And and community is a variety, of individuals, both community members and community stakeholders, which are our businesses, but absolutely those who are our residents, who are living in the community, working in the community. There needs to be a real level of equitable benefit when it comes to these various products. And so that's kind of where I stand on that. And I know I was not able to be at DPS because of just life happening, but I wanted the time to talk and at least speak that on the record from my perspective, where I know that I will be voting no on this, just because, again, it's just not enough for people. People are frustrated, people are tired, they get all the promises in the world only to end up getting nothing. While everybody else, for those who already have everything, continue to get everything at their own demise. And we have not seen evidence that that is not the case.
Through the chair, I appreciate and understand your perspective. I think that the challenge that happened in Cincinnati and Columbus is just a lack of attention to being intentional about this and tracking it up front, which is not going to happen here. I also think in many ways these things are difficult to measure, and I think it's one of the things we're going to need to think about. Even in your ward, where I had the honor of working at Midtown before, we put up a UH Rainbow Baby and Children facility, a Dave's Market, the Tech Hive, and a Hilton True Hotel, all of which I think have benefited the neighborhood and benefited residents in different ways, right? It's healthcare, it's food, et cetera. There's clearly far more investment that is focused on resident benefit that is needed. But even in looking at those, how do you measure the community benefit of healthcare and healthy and grocery in a neighborhood, and the impact of that on residents? And it's something I think we're going to be very clearly looking at. How do you measure the impact of public space on community? And I think we're going to be looking at specifically in the community benefits agreements, the level of engagement with youth, with students, with employees, both in construction and in permanent jobs. But would welcome working with you to kind of set it up so that we can be looking at looking at advocating and tracking community benefit the right way.
Yeah, so I think I appreciate that, that thought process. I think at the end of the day, in a capitalist society, the way that you judge this is based on the dollars, right? Are people's median income going up as a result of this investment? If the answer is no, in a capitalist society, the answer is no. That is the litmus test we should be looking at when we are making, generational investments. We should be able to correlate that, and which should be done in a way where people's, the dollars that are going into people's pockets should be also going up. And so there should be connected to that financial ecosystem, right? Which then would prove you would, again, all of the negative rankings will begin to show some improvement because you will have access, to having money to buy fresh fruits and vegetables. You have stability in your housing. There are things that will actually reveal themselves in the capitalist society that we have. And so that's kind of where I am. And so I guess I will see, as you talked about, the job numbers were able to be produced from Cincinnati and Columbus based on that, and are they broken out from the temporary construction numbers versus the long-term ongoing employment numbers? And then are they broken down as far as the annual salaries or hourly salaries or anything like that?
So through the chair, we were not able to get any of that detail.
Right. And you see some, and so again, that just goes into I would say just overall hesitation, because I think those things are vitally important to make an informed decision. And for me to have a level of confidence that my yes vote would mean, yes, we are going in a better direction that will benefit more people in an equitable way. I would say that. Because even though, like, for Columbus and Cincinnati, as people try to, they tout them as like, oh, these places are, they are thriving places, they are strong. When you look at those who have been generationally cut out, they are not doing well in places of Columbus and Cincinnati. When you look at child poverty, they are not. So that's just kind of where my stance is. But I do appreciate the work that people are going on. And again, it's just from my perspective. And but I am a partner. I'm willing to work, all those types of things. But I do not think, in an imperfect society, in an imperfect world, saying that 100%, that's not realistic. So thank you all.
All right. That's all the questions because Councilman Bishop is, he had to leave unless he hurries back up in here. But I just want to say, just in closing, this is one of those pieces of legislation that was complicated, and a lot of us had to spend a lot of time really trying to understand this. And I do want to just follow up on what the councilwoman is saying. At some point in time, we got to really think about philosophical trickle-down economics. People just doesn't have confidence in it, and people want to understand how they're going to get cut in on the front end, which is one of the reasons why I really was considering a community benefit agreement on the other side. But we're going to do that when you come back to us for the bonding. And it's going to be very, very critical to make sure that the middle and edge and distressed neighborhoods feel like they're a part of this. Because the days of just telling everybody if we just go downtown and help downtown grow, that the rest of the city is going to benefit, people are skeptical. People just haven't seen that happen. Yeah, and I just want to, I do think we need to strengthen our city core, which is one of the reasons why I'm very, very much in support of this. But we got to be just as innovative in looking at some other areas, even if we might need to tip some other areas in order to make sure that we have some of the investments. I am concerned, and we do want to watch and monitor some of the things that Councilwoman Santana said about if property appreciates there, will it cause a spike in the adjacent properties appreciating, which some people may not be able to afford. So we're going to be watching this closely. And looking forward to having an ongoing conversation about this. But once again, I think it's a tool that I'm willing to take a risk on. And I have talked to the attorneys to us, and they have told me that if this thing does go the wrong way, then we will have an opportunity to repeal if we see that happen, of course, in consultation and seeing if this thing isn't going the right way, then we will have an opportunity to revisit it, okay? That being said, this Committee of Finance, Diversity, Equity, and Inclusion stands adjourned to the next meeting of the chair on April the 1st. Thank you.